a great nation with the largest Muslim population and abundant natural resources. The market potential for halal and toyib food is growing locally and globally. Also, the need for attractive fashion products that still match Sharia values and high international quality standards. ICRA, Industri Kreatif Sharia Indonesia, is a program built to strengthen Sharia entrepreneurs in halal food, drink, and Muslim fashion through enhancing product quality and capacity. Financing access, market access, online or offline, domestic or global. Held by the Department of Economy and Sharia Finance Bank Indonesia. ICRA is expected to upgrade the quality of Sharia economy-leading products to penetrate and compete with global products in the domestic or international market. Since it was established on 11th of December 2018, now ICRA has hundreds of members across Indonesia. Sharia entrepreneurs from fashion and halal food drink sectors who share the passion and commitment to contribute to advancing the Sharia economy, especially community-based businesses that involve local people, can join ICRA. ICRA provides market outlets in and outside Indonesia with various exhibitions and business matching. ICRA's goals are to bring out reliable Sharia entrepreneurs in food and drink sectors and Muslim fashion who put forward not only halal, but also toyib standard value, able to compete globally. This is accomplished by building an integrated ecosystem from the local halal value chain to a global halal value chain. Adapting to the digital era for easy accessibility, we run an up-to-date website, active in social media, and keep evolving in digital technology, such as upgrading the linkage between digital-based Sharia entrepreneurs. ICRA Indonesia, we move together with entrepreneurs, collaborating for prosperity, to become role models in building the Indonesia Sharia economy. ICRA, a leading halal business chain in Indonesia.
Aduh, kenapa Bin? Perut udah mulai keroncongan.
Udah, kita sholat dulu aja.
Oke.
Assalamualaikum warahmatullahi wabarakatuh.
Pak, pesanannya sesuai buat 3 orang ya. Jangan pakai lama, cepat, udah lapar.
Bimo, ayo cepet yuk.
Ayo.
Oke.
Yuk, perut udah nyanyi nih. Ayo. Oh. Yuk. Lama banget sih. Yuk.
Bimo!
Apa sih?
Astagfirullahaladzim.
Kan Kan kita udah berdoa, lapar ini.
Ini halal nggak?
Iya, Bim. Pastiin dulu nih aman apa enggak. Jangan main pesan-pesan aja.
Mas,
Ada yang bisa dibantu, Pak?
Maaf Pak, ini halal nggak?
Oh, itu. Di sini sudah tertera logo sertifikasi halalnya kok. Jadi aman kok.
Terima kasih, selamat datang kembali. Assalamualaikum, selamat datang.
Selamat malam.
Mau cekin atas nama Abdi.
Oh iya, ini diisi dulu ya formulirnya.
Iya.
Namanya di sini, nanti check in sama check out kita tangan di bawah ya.
Iya.
Terima kasih. Dan ini akses untuk masuk kamarnya.
Oke. Makasih, Mbak. Ayo, Bim.
Iya, yuk. Wah, kamarnya nyaman ini.
Iya, luas juga sih. Capek banget, Bim.
Iya, habis nyetir.
Ikhlas kan tapi.
Ikhlas dong buat sahabat. Bim, sholat Bim. Oh iya, yuk.
Your Excellencies, distinguished guests, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh. Good morning and good afternoon to everyone. On behalf of the Islamic Financial Services Board, IFSB, and International Islamic Financial Market, IIFM, I have the pleasure of welcoming you virtually to the IFSB IFM high-level seminar themed Accelerating Islamic Capital Market Development and Digitalization. This seminar is being held in conjunction with the 7th Indonesia Sharia Economic Festival, ISEF 2020. Let's begin today's seminar with a short prayer dua.
الحمد لله رب العالمين حمدا يوافي نعمه ويكافئ مزيده يا ربنا لك الحمد كما ينبغي لجلال وجهك الكريم وعظيم سلطانك اللهم فصل وسلم على سيدنا محمد وعلى آله وأصحابه أجمعين اللهم إنا ظلمنا أنفسنا وإن لم تغفر لنا وترحمنا لنكونن من الخاسرين اللهم اغفر للمسلمين والمسلمات والمؤمنين والمؤمنات الأحياء منهم الأموات فيا قاضي الحاجات اللهم أنت الميسر كل عسير يسر كل أمورنا يا رب العالمين ربنا آتنا في الدنيا حسنة وفي الآخرة حسنة وقنا عذاب النار وقنا عذاب النار وقنا عذاب النار سبحان ربك رب العزة عما يصفون وسلام على المرسلين والحمد لله رب العالمين
Bismillahir Rahmanir Rahim. Without further ado, I would like to invite Mr. Ijlal Ahmad Alfi, Chief Executive Officer of International Islamic Financial Market, to deliver his welcoming remarks. Please welcome Mr. Ijlal.
Bismillahirrahmanirrahim. Assalatu wassalamu ala nabiyyina Muhammad wa ala alihi wa sahbihi ajma'in. Assalamu alaikum wa rahmatullahi wa barakatuhu. Very good morning and afternoon, or maybe perhaps evening where we are. Excellencies, distinguished guests, and dear participants, it's indeed honor and pleasure to be part of this joint IFSB-IFM webinar. Indeed, the role of Islamic infrastructure institutions and their cooperation and working together has been contributing in the development of Islamic industry. Before I begin my short presentation, I would like to thank Bank Indonesia and also ISEF for arranging and working so hard in arranging this webinar. And we are indeed honored to be part of this ISEF for last number of years now, which indeed is a unique platform in promoting not only Islamic finance, but Islamic economy. In terms of infrastructure institutions, if I may request my presentation, maybe that will, if they can load, so we can go to the next page. And this is the state of standard setting organizations, especially three, AOFI, IFSB, and IFM. And indeed, if you look at the architecture in terms of conventional institutions, in terms of the standard setting organizations, and their respective roles. In Islamic finance, alhamdulillah, we have now reached a stage where each has its own area of mandate which it works on. Like AOFI has been there for a number of years now, nearly 30 years now, and it's contributed immensely in the Sharia standards and accounting and auditing, as well as governance standards. IFSB also have come along, in terms of providing the regulatory and supervisory and governance standards, which definitely help in the orderly development of the industry. And also an IFM, which take care of the documentation and product confirmation needs. And I will briefly mention, some of the things which perhaps will be maybe useful for the listeners. And then we have SIBAFI also, which take parts in the information in terms of providing capacity building. And so there are about 6 of them, but I have mentioned the 3 main ones in SIBAFI. The next slide. IFM, without going into the greater details, you can see when we are formed as a special institution under a royal decree. And our main aim, as I have said, is developing the product and also documentation standards, which basically encompass not only the Sharia elements, but also the legal aspects, also the operational aspects in the transaction, and also looking at the market participants. So it combines all which is necessary in terms of required for the transaction level as a whole sort of a thing. So it's involved, of course, the Sharia is a paramount, and it's basically the main basis for all standards which are developed in Islamic finance. If we go to the next slide, please. In terms of, if you look at the benefits, all standard setting bodies, especially the 3 which we have mentioned, have their role and they contribute in the development of the industry. Given our nature is non-profit and neutral, naturally we get the support which is required, but something which I will also mention what else can be done to further strengthen the Islamic infrastructure institutions. But alhamdulillah, we have been trying our best, and in this present environment of COVID-19, still, we are trying our best to move, and you can see in my presentation also some of the things we are able to do with the grace of Allah subhanahu wa ta'ala, what we can, in terms of helping the industry. So the main benefit, if you look at it, which is for the institutions, or let's say sukuk issuer, or let's say, any other party which is involved in the Islamic transactions, is the cost factor. So naturally, when we do our standards, the cost element, if you take most of the standards, you can take as it is, and you can even use Sharia's pronouncement, which is IFM Sharia Board. It is 100% can be used, and we have seen that in the use of the standards, that some institutions, especially the institution which is limited Islamic finance activity, or which is more inclined towards the conventional, what they started Islamic operation, that also will benefit. Apart from the main Islamic institutions which are now using, some of the bigger groups of Islamic institutions are now using IFM standards. So cost element is a major factor. If you look at the computation cost, generally, if you compare it with the conventional, given the peculiarity, given the contract we have to use, whether the contract is debt based or whether the contract is equity type. So naturally, all these elements have to take in account, and it costs when you do it. So that's something which we take care of it. Sometime question is asked whether we still have some costs. Sometimes there is a cost. So it's not that when you develop these standards that everything is taken care of, so institution will be cost free. Of course, there will be some costs, maybe internally certain things in the credit wise or operational wise, without disturbing the Sharia. Naturally, what has to is, bank have to spend that money, but it is not really more than what we have seen in 5 to 10, and that's a common factor. If you look at it in the conventional market also, that's how the standard setting in terms of space of documentation and product information in the conventional work on the same basis. So this is one thing. Then you reduce your time efficiency. So that is also very important, because the documentation take time. to develop. For example, when we develop standards, we're naturally given a process and how we basically develop with the market consultation and then working with the industry, the working group, working with our Sharias. Naturally, it takes time to develop. For institution also, of course, they don't have to work about the global sort of or wider acceptance point of view, which as a standard setting body, we have to look into that element. But again, there is a time factor which we provide that efficiency, so the ease of doing transaction increases. It also helps in terms of, although we don't really in Islamic finance encourage the speculative transaction, but it increases the level of transaction because the cost factor is taken care of, you have time efficiency, so naturally the more transaction can be done. So that's how the industry also grows with these standards, which is a major thing what we want to see. And Islamic finance now, alhamdulillah, is global. It's been used in a number of jurisdictions. If you can see, not more than at least more than 30 or 40 jurisdictions. Some are sort of a very developed stage jurisdictions, which we all know, and some are basically now entering, especially from Africa and other regions. Legal certainty also something which we also provide, and that's one thing one has to be mindful that in terms of the governing law, arbitration, these kind of things we don't standardize, but we develop our standard on the let's say English law basis, but then it is overall one has to see up to the transacting parties or at the regulatory level what they require. So the governing law is something which is always changes, but we provide that certainty. Governing law, we also provide the legal opinions for some of our standards, which is from the enforceability of the contract purposes, because sometimes, especially if you see now in the COVID-19 era, business sometimes may not be performing well. We don't really pray that that happens, but there's sometimes there could be disruption or there could be bankruptcy. So these kind of things one has to sort of see in terms of legal opinions. So our recent legal opinion, which has been issued last week, in fact, is for UAE federal law for netting law. So that is also help in terms of booking of the transaction in our OIC countries. That's what we encourage, bringing these sort of required laws which are required. Of course, Sharia is something which is always we work around that. So all the mechanism, the Sharia harmonization, reference to AOF standards or other fiqh academic standards when we develop standards is always taken into account. And of course, if there is something for IFSB, on let's say on the regulatory capital treatment point of view, other factors which are there from regulation point of view, it's up to IFSB to address, and they do. And then we also, when we provide us a standard, it gives you a reference point, which is very important for the industry to have a reference point where one can see, exact transparent manner that what this transaction or what this documentation is or what this arrangement is. So this is in a nutshell what, in terms of the benefits, what IFM brings, and other institutions also I have tried to mention, the AOF and IFSB. This, we all work together in terms of developing our industry in a strong and transparent manner. The next slide, please. If you can change the slide, please. We have so far, looking at adaptation, we have so far issued 13 standards. These are naturally each standards take time to develop. So we have 3 liquidity management standards, we have 7 hedging standards, which are quite widely used now. And then we have also standard relating to trade finance, which is participation in the trade finance funded and funded activities. And also just very recently, we have issued, in fact, this month only, Sukuk al-Ijara template documentation. And you can see this will help the Sukuk. So Sukuk, one of the main factor has been, absence of standardized documentation. And this document consists of 7 documents which involve. So it's, you can see in our website, time doesn't allow me to go to each and their key features, but that's something which we sometimes do in our workshop, and also we are planning to start educational or capacity building on IFM standard, published standards. Inshallah, by next year we should be starting a program on training for our standards or executive training for our standards, published standards particularly. And then we also, when I mentioned earlier that we look at when we develop standards, what is the market practice, how the operationally things work. So when you have a standard, let's say from AOFI, it doesn't really give you a practically how the transaction will be done, what documents they will sign, or what arrangement has to be in place. So that is what we take into account. And then we look at the legal side, what the legal implications are. So we provide clarity. For example, in Sukuk, we know that we have Sukuk issued mostly on a beneficial ownership basis or asset based, we call it. All the other requirements are there, but the title doesn't transfer. In that case, we also have to see that beneficial in the law which exists. So there could be some jurisdiction, let's say Indonesia could be common law, or this could be, or Indonesia would be civil law, or Malaysia could be common law. So how these sort of contract or ownership is recognized. So that's another thing which when we do these standards, we look into that and provide clarity. So sometimes clauses may not be very clear that especially if we talk about Sukuk. For example, it will mention maybe the title need to be transferred. So there are reasons why sometimes these clauses are a bit not transparent and vague, but there is a reasoning. So we provide that clarity, and also that when you look at this transaction and why Sukuk also, that's a different topic, but why the Sukuk is mostly asset based, what has been reasoning. So we have a reasoning for that, and it's something which basically we have to be mindful that we also work, in the sort of looking at the laws, whether civil law or common law jurisdictions. So these are also elements which we have to be mindful when you have standards. And the Sharia, of course, the main reasoning in the Sharia, most of the things, if you see, widely acceptable, there are not really that many which we can say has disputes. So some of the things we know in Sharia, which, for example, which I can put it in a simple manner, could be no-go area. So we know that equity type contract, for example, they cannot be sort of, you cannot guarantee those contracts. So it is very clear. So nowhere it will be that you have an equity type contract, let's say wakala or mudaraba or musharika, and then you will see that there is a guarantee of purchase undertaking. So that kind of things also we have to be mindful that there are certain areas where we sort of have a no-go area, so you cannot cross that line. Apart from that, Sharia, provide a lot of, alternative. Alhamdulillah, we have, distinguished scholars which have guided us. And here I'd like to also, mention, the two great scholars who helped the industry who recently passed away, Sheikh Hamid Ahmad Hassan Hussain and Sheikh Abu Ghudda. And we are really, may Allah, bless their souls. They really contributed in the industry development. And Alhamdulillah, we have scholars, and I hope this process continues. Next slide, please. So this is something which I think I have already mentioned, that when you have standards, they are mostly voluntary in nature. So all our standards are voluntary in nature. We see, that's a common theme you can see from the conventional. But then we have also, in some cases, some jurisdiction, and there are few in IFM case who basically either say, that standard has to be used, or they encourage the institution. So there is, but in terms of institutions and voluntary interpretation, that is improving as we have seen. And AOFI recently did a study or report just a few days ago about footprint of AOFI standards. They mention how the standards have been implemented and all. So same kind of exercise, we also look at it and we see, and there is still a lot to be achieved in my view. And I really encourage the industry, especially the institutions, to come forward and work with the standard setting organization, IFM and IFSB and AOFI in particular. Next slide, please. We have, if you generally look at it, even we do some surveys, and based on that, and institutions. So we have, alhamdulillah, there is improvement. So our standards are generally in the hedging is 150 institutions as per our survey and discussion with the institutions, based in 18 countries. So it's not 18 countries are imposing. I wish that that happens in one day, but that's something which we basically have achieved in the hedging, which IFM is a pioneer. So this hedging, if you look at it, it is covering about the risk mitigation. And that is very important, both if you see in terms of 2008 financial crisis, when there was a great deal of uncertainty, you have a lot of volatility. Of course, Islamic finance in many places is not only domestic currency, but it is hard currency. So you see most of the sukuk could be in dollar, international sukuk, or could be euro, or could be sterling. So that has to be managed. So we are not talking about hedging its normal derivatives and all, that's different, but this is pure sort of risk mitigation, which is very important. Same to do with the, we use, and I will, in my session, I will cover the benchmark rates and how they are used. So naturally, when we use benchmark, there is, changes global, which affects us. So that is also something which we provide. And the overall, the main sort of a master agreement, which we have developed, although IFM take care of when the development takes place in terms of the process itself and Sharia guidance and market consultation exercise. But we have seen in the hedging, working with ISDA, that we have able to create a separate Islamic master agreement, which is being used now by many international banks, Islamic banks, and others. And that's something which we continue to work. We do also have liquidity management standards, which are 3 standards which are used quite widely. Also, you can see we also have a participation agreement I mentioned for funded and unfunded trade finance transactions. And this is something which we issued last year. So normally one has to be mindful when these standards are issued, it takes time for implementation. There are 2 ways or 2 things one has to keep in mind. One is that some bigger institution, they may have their own, so that to move to IFM standard, it takes a while. You have to go through the institution, the whole process. They have to see from the legal side, from the operational side, from the credit side, and also in some cases Sharia also. Of course, they have to do their internal Sharia assessment also and seek that guidance as well. So naturally, it takes time to implementation level reaches what we have seen in the liquidity management and hedging standards. But this was issued last year, and we have been continuously, institutions are inquiring, and there's, I think soon we will know how it is progressing in implementation. And then, as I mentioned, just on 12th October, we alhamdulillah issued the Sukuk al-Ijara documentation templates, which will develop, inshallah, help the further development of Sukuk market, especially now in the cost factors and all. So we hope one of the things we see apart from Malaysia, that Sukuk generally, the level of, I think if you see the expectation from the corporates side, there is a lot of potential there. We have not really fully achieved that potential for Sukuk in many jurisdictions. So Malaysia, I think, is something which they have developed, but other countries, even in GCC, I think level of Sukuk or corporate issuing Sukuk is still something which I think we can achieve much more. And COVID-19, naturally, things have changed. So Sukuk, corporate also in any economic downturn or this kind of thing, which I pray that we are over with this COVID-19 soon, inshallah. But that affects the issuances level. But this will, inshallah, help even the new jurisdictions who are not clear, what documentation to use, how the structure Sukuk will. So we have, alhamdulillah, provided these standards. And these standards are available on our website. So IFM being infrastructure institutions, our motive is not really to charge in all. But of course, we encourage, and that's what we require also, institutions' participation from Indonesia and all other countries. So we do require that, and I hope further improvement, inshallah, will be made in the coming years. Next slide, please. IFM, we continue to look into the other factors in terms of what can be done to further improve the industry. And our main process, what we do, is go through the consultative phase. So Sukuk al-Mudaraba is now something which we, inshallah, we already had our Sharia board also even. So that should be, inshallah, finalizing in next 1 or 2 months, and we should be issuing it as per our board decision when to issue sometime. We had to, like Sukuk Lejara, wait for a few months because of the COVID-19, and some places it was not the right environment. But this is, inshallah, Sukuk al-Mudaraba documentation for Tier 1 is something which we will be coming out in the near future, inshallah, from IFM. We are looking at syndication market also. That is a very important market in various jurisdictions. So documentation for that is something which is also required, and we are planning a consultative which was delayed for last few months. It was delayed, so we are at the moment working on certain other priorities which industry put on us, but this is something which in the near future we should be starting consultation. We are also looking at the gold, and we have seen how the gold is used and how it can be sometimes used as a hedge. If we have seen now the gold prices and all, naturally they reach the record levels, and there is some documentation which is there. So we had a very extensive consultation about documentation. So this is something which an AOFI also a few years ago issued a Sharia standard on the gold and what can be done. So this is something which we will be doing it by next year, I would say. And then we are also looking at in the hedging standards and all, which probably we did the consultation, and there's some other work which is related to which is my session topic would be looking at the global benchmark rate reforms, which will also be part of something which we need to do, not only for hedging, but other segments like syndication and all. So there are certain things which need to be done. So next slide, please. So I have already, we have also looking at the expansion of the industry and in terms of the use and in terms of further help the industry, especially some countries in Africa region and the French-speaking countries. For that, we have issued also released, rather if I'd say, in French translation for 6 standards. So this is available. This also will help if you see now what is happening with the Brexit, which UK is now leaving. So naturally, French maybe speaking jurisdiction might be sort of something which, from the hedging perspective, something which we will also see that maybe the use can be further increased. So this is something which we continue to now look into the other jurisdictions, how we can help those jurisdictions which use other languages. And we also, inshallah, discuss at our board level to see to translate it in Bahasa Indonesia also. And that's something maybe if required, that's something that we might be doing. Also translating our standards, because in certain countries, their local, language is used in terms of the contractual documentation. And that's something which probably, if we are advised and if recommendation comes, IFM would be doing. So next slide, please. We are also, I've already covered most of it. So I think you can see another thing which probably I didn't cover is the last point is our Sukuk report, which has attained, somewhat global level, alhamdulillah now. And it's always received a very good response, and we receive contributions even from countries like Indonesia, as their countries' Sukuk issuances, and also contribution from institutions and our own standards. So this publication has now, I would say, one of the few left which really provide a good in-depth update on the Sukuk market, on the issuance. So this continue to improve, and we will be now, we had a good webinar for now we would be launching or publishing our report through webinars on Sukuk. So next year, inshallah, we will be having our 10th, and already we are working hard and receiving good response of support from various sponsors for this report. So this is something, if you have not seen this report, so I encourage you to visit IFM website and see the report. So most of the thing others I have covered, so we can move to next. And I have already, I think, reaching my time. So we'll move, inshallah, the next slide. And then I think finally what we also need to do, and we are really very happy to see from IFM board and also IFSB that we work together now and best interest of the industry. And this seminar we are jointly holding, which is really very pleasing from my personal also, Dr. Bello. We, mashallah, work very closely now in various aspects and keep our interaction to help the industry. So IFM, despite the COVID-19, we have managed to at least have 5 of them already have taken place, various seminars and various webinars we have taken place virtual, and we are now moving towards the consultation on global benchmarks, which you can see, which is something, which we like to see how the implementation would take place. So we have been, in terms of, despite, I would planning last year, I was in Indonesia for ISAF, and this year it's been different. But alhamdulillah, we are able to connect and able to also, present this seminar, which I'm really thankful to BI again, and also AOFI, or also working with IFSB in particular. With that note, I would like to end my presentation. I hope I was able to clarify a few things in this short time, and few things might be helpful to you, to the listeners. Assalamu alaikum wa rahmatullahi wa barakatuh.
Thank you, Mr. Ijlal, for the very informative welcoming remarks and presentation on the updates and the current status of the projects being delivered by the IIFM. Your Excellencies, distinguished guests, ladies and gentlemen, allow me now to invite Dr. Bello Lawal Danbata, Secretary General of the Islamic Financial Services Board, the IFSB, to deliver his opening remarks. Dr. Bello, the floor is yours. Please welcome.
Thank you. Thank you, brother. أعوذ بالله من الشيطان الرجيم. بسم الله. أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. والصلاة والسلام على سيدنا محمد وعلى آله وصحبه وسلم. Your Excellency, Mr. Hussein, the Executive Head of Capital Market Supervision, OJK, my good brother and friend, Honorable Mr. Ijlal Alvi, distinguished guests, honorable speakers, ladies and gentlemen, Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh. It is indeed a great honor and pleasure and privilege for me to be with you virtually today to deliver an opening remark for this important event alongside the Indonesia Sharia Economic Festival 2020, which was organized and hosted by Bank Indonesia and OJK. I would like to specifically, before I start, thank the Bank Indonesia, OJK, as well as the ISEP organizing committee for giving us the opportunity and the privilege to have this joint high-level international seminar together with IFM. I would like to, first of all, like what my brother Ijlal did, for the benefit of those that are not familiar with the IFSB and the work of the IFSB, to highlight a bit about the IFSB. The Islamic Financial Services Board, IFSB, was established way back in 2002, and we commenced operation in 2003 with 9 members as founding members. As of today, the IFSB has 187 members from 57 countries, comprising of 79 regulatory and supervisory authorities that comprise of the Financial Services Authority, central banks, securities commissions, and many other regulators. The membership of the IFSB also comprises of the 99 market players, that is institutions like the Islamic financial institutions, the Islamic banks, the intercapital operators, as well as the Islamic capital market and other relevant institutions. We also have in the IFSB members 9 international organizations that include the IMF, the World Bank, the Bank of International Settlement, the Islamic Development Bank, the Asian Development Bank, the ICD, the IEICD, the United Nations Development Program. They are all members of the IFSB. The work of the IFSB and the mandate of the IFSB is to complement the work of the Basel Committee of Banking Supervision, the BCBS, the work of the International Organization of Securities Organizations, the ISCO, and the work of the International Association of Insurance Providers, the IIS. And most recently, we have actually also attempted and currently working to complement the work of International Association of Deposit Insurance Corporation. The mandate of the IFSB has to do with the prudential regulation of the global Islamic financial services industry. We develop and facilitate the implementation of prudential standards through workshops, technical advice, policy advice, and as well as creating public awareness on Islamic finance and collaboration with our members. The IFSB's work has witnessed endorsement by most famous and bigger international organizations, multilateral organizations like the IMF and the Financial Stability Board. Having said that, today's high-level seminar between IFSB and IFM is one of our activities, many activities that we organize. So please allow me to once again welcome you all to the IFSB and IFM high-level seminar, a webinar that is themed Accelerating Islamic Capital Market Development and Digitalization. It is indeed an honor for all of us to witness the presence of eminent Islamic finance experts comprising of academicians, regulators, and practitioners from around the world to discuss and share ideas that will pave way for the development of Islamic finance, especially Islamic capital market and its digitalization agenda today. Over the years, the development of Islamic capital market has been very commendable. And today it is valued at $645.7 billion US, which accounts of approximately about 26.5% of the global Islamic financial services industry asset. This is in accordance with the IFSB Stability Report 2020, which covers the financial services industry assets as at Q2 2019. While the outlook for the Islamic capital market, based on the analysis of 2019 data analysis, is very positive, there are some areas of potential vulnerabilities and persistent downside risk that need to be carefully monitored. The current global risks are significantly weighing towards the downside. Some of the more prominent downside risks include the prolonged and severe impact of the COVID-19 pandemic, the volatility in oil prices, the escalation of geopolitical conflicts, the renewed trade tensions, climate change-related risk, increasing protectionism with regard to the global economic policies, the inherent or accelerated cyber risks and cyber security as well as cyber attacks, all of which can pose risks to the financial stability, including the Islamic capital market. However, in contrast to the above vulnerabilities, COVID-19 in particular introduced several opportunities for the financial sector to leverage on, which include, among others, acceleration, the adoption of digitalization. As a result of this, we are witnessing rapid technological advancement, especially in Islamic capital market space, in introducing more inclusive, innovative, and efficient capital market. Also, some government authorities have streamlined the Islamic capital market in their national agenda to deepen the Islamic financial market through innovative Islamic capital market product development by embracing the emerging technology, particularly fintech, through accelerated digitalization. Some of the key initiatives that we have witnessed include the issuance of Malaysia's first digital sovereign sukuk worth about 120 million US dollar, known as Sukuk Prihatin, which signifies as one of the initiatives under the government's short-term and economic recovery plan amid the pandemic. The issuance of the world's first blockchain and micro sukuk worth thousands of dollars in Indonesia. The launch of the FinTech Lab by the Capital Market Authority of Saudi Arabia to foster the development of FinTech products, services, and business models within the specified parameters and timeframes. The launching of the FinTech Hive by the Dubai International Finance Center, DIFC, which signifies the first FinTech accelerated program in the Middle East, Africa, as well as South Asia region. Aside that, we have also witnessed the issuance of a sukuk, green sukuk by the Islamic Development Bank that also meant to accelerate the development of the global Islamic financial sector. Aside that, we also witnessed the crowdfunding developments, namely the equity crowdfunding and peer-to-peer financing that has been becoming very prevalent in a number of jurisdictions. It is becoming an alternative fundraising options for micro, small, and medium enterprises, as well as the emergence of crypto assets. Distinguished ladies and gentlemen, according to the Global FinTech Index 2020, it is anticipated that by 2022, 60% of the global GDP will be digitalized, and digital financial services will serve as the key to power the global economy transition to the fourth industrial revolution. I strongly believe the Islamic capital market has high potential to enable such transition and will play a major role in addressing the economic concerns through the development of innovative products and the regulation to support the Islamic financial markets while maintaining the soundness and stability of the global Islamic financial service industry. The Islamic capital market has indeed have a crucial role in serving the real sector and accelerating the economic growth via various project financing options that is to offer, which are yet to be untapped. The IFSB is strongly committed to facilitating the development of Islamic capital market through publication of research, development of international standards, and organizing awareness programs for the benefit of Islamic financial industry, regulators, supervisors, marketplace, and other stakeholders. As you may all recall, in 2019, the IFSB Council has approved the adoption of the first technical note on financial inclusion, which covers guidance and standards with regard to the application of FinTech, as well as the Islamic social finance, that is Waqaf and Sadaqah, as well as the collective investment schemes and other microfinance institutions, as well as product and initiatives. The IFSB is ever committed with this pandemic to continue to work closely with its members in coming up with enhanced guidance and policies that will support the development of the global Islamic financial service industry. I would like to commend the effort of the Bank Indonesia in partnering and supporting the IFSB right from its inception to date, in delivering the IFSB, in helping IFSB to deliver its mandate, not only for the Indonesia or the Asia region, but globally. The support that we receive by our major stakeholders and founding members like the Islamic Development Bank has been very, very tremendous in ensuring the success of the IFSB's mandate. The sessions in today's high-level seminar should enable us to bring together various perspectives from academicians, the industry participants, the regulators, to discuss and share insights to identify areas where we need to further strengthen the resilience of the Islamic capital market sector. And we will be able to learn what the pandemic has brought in and how we'll be able to transform that into an opportunity. I believe the next frontier for the Islamic finance will require an enhanced integration of the financial services industry to support the inclusion as well as the application of Islamic social finance instrument. There is a need for sustainability initiatives. The Sustainable Development Goals, as we are all aware, are fully aligned in most of their principles with the Maqasid of Sharia principles. We believe the Islamic capital market will play a significant role in attempting to solve the poverty issues as well as the Sustainable Development Goals issues and the environmental and sustainable development goals issues as well. The Islamic capital market has been growing rapidly compared to its other sectors. We believe the existence of the pandemic posed a challenge for many organizations and jurisdictions as well as corporates to start looking for alternative ways of financing that will help promote the resilience and stability of the global economy. Hence, the capital market will ever continue to play a role like every other sectors of the Islamic financial services industry. I would like to once again thank the organizers of ISIF, the Bank Indonesia, the OJK, as well as the participants and delegates and speakers that are participating in today's event for sparing their time and to be with us and for participating in IFSB IFM high-level international seminar. I want to once again thank the organizers as well for their tireless effort in making this event a success. On that note, I would like to conclude by wishing you a productive discussions and look forward to the constructive outcomes of this engagement. Thank you. Wassalamu alaikum wa rahmatullahi ta'ala wa barakatuh.
Thank you, Dr. Bello, for these insightful remarks. And now we will witness the keynote speech, which will be delivered by His Excellency Mr. Hussein, Executive Head of Capital Market Supervision and Member of Board of Commissioners of Indonesian Financial Services Authorities, OJK. Mr. Hussein, the floor is yours.
Assalamualaikum warahmatullahi wabarakatuh. Good afternoon, Honorable Host Mr. Bello Lawal dan Data, Secretary General of Islamic Financial Services Board, Mr. Ijlal Ahmed Alfi, CEO of International Islamic Financial Market, distinguished speakers, moderators, and participants. First of all, let us thank to Allah Subhanahu wa Ta'ala, God Almighty, for His blessings and guidance that we can gather virtually to attend the high-level international webinar on accelerating Islamic capital market development and digitalization as part of ISAF event series. Allow me to begin by thanking Islamic Financial Services Board, International Islamic Financial Market, Bank Indonesia, OJK, National Committee of Islamic Economy and Finance, all speakers, moderators, and attendees in taking part on these seminars. We are grateful for the committee's effort to organize this webinar as a medium for discussion, interaction, and sharing of experiences to accelerate the growth of the Islamic capital market. Distinguished guests, ladies and gentlemen, 2020 is a challenging year for the global economy and the global financial markets. The COVID-19 pandemic and the measures taken to prevent its spread have had a significant impact on the economy landscape. Various OIC countries had negative growth on GDP and Purchasing Managers Index in the first semester, indicating a decline in economic activities. In accordance with the real sector, Islamic capital market also experiencing a downturn, especially in the first quarter. To cite an instance, FTSE Bursa Malaysia Hijrah Syariah Index, Pakistan Karachi Mizan 30 Index, Saudi Arabia MSCI Tadawul 30 Index, and Jakarta Islamic Index are all encounters a sharp decline on March. However, with a variety of policy response, both from a health and economic point of view that are properly formulated, we can see optimism rising again. In late March and early April, the index started to show a rebound. Subsequently, some are followed by a continuous uptrend and others are in the consolidation phase. Amid this condition, regulators have learned three valuable lessons. First, It is essential to respond quickly and precisely to provide short-term solutions while continuing to implement long-term solutions. Second, the Islamic capital market must be able to be a solution to help improving the real sector economy. Third, technology has an important role in accelerating Islamic capital market development, especially in conditions where direct human interaction is limited. Appropriate policy response are essential in times of a pandemic because it will maintain market credibility and investor confidence. If this is unaccomplished, the development of the Islamic capital market can be hampered. Like other OIC countries, Indonesia also has a policy response to maintain market conduciveness amid fluctuated market, among others. Clearance for listed companies to conduct buyback without annual general meeting of shareholders approval. Suspension of short selling, adjustment of auto-rejection provision, additional trading halt policy, extension of certain report guideline, and the time flexibilities for mutual fund to adjust its portfolio. Regarding policy response, we would like to appreciate IFSB for swiftly issuing a compendium on policy response from numerous countries. Through this compendium, IFSB members can learn from each other and providing a reference for the futures. Therefore, regulators can improve the quality of response during a pandemic and are expected to minimize shocks that can deter the development of the Islamic capital market. In addition to policies with short-term objectives, during the pandemic, we also continued to carry out activities with long-term goals to develop the Islamic capital market. In August, OJK published Islamic capital market roadmap for 2020 to 2024, which has created by involving various related stakeholders. The roadmap focus on 4 directions. First is Islamic capital market product development. The second one is strengthening and developing Islamic capital market infrastructure. And the third is increasing Islamic capital market literacy and inclusion. And the last one is strengthening the synergy with stakeholders. The roadmap aims to provide a direction and strategy for the continuous capital market development policy. Thus, the Islamic capital market is expected to fulfill its vital role in helping national development goals and become a pillar for realizing people's welfare. Apart from the roadmap launch, other notable activities that have been carried out in 2020 are research and education. In the context of research, the topic chosen generally aim to help and accelerate the growth of Islamic capital market. For example, research on the development of the halal industry, Islamic asset-backed securities implementation, and sukuk crowdfunding. Meanwhile, in terms of educational activities taking advantage of the condition where people are accustomed to virtual meetings. We conduct many seminars, live sessions, and training of trainers that can reach a wide range of audiences effectively. Up to the third quarter, we have conducted dozens of seminars and live sessions, organized economic and Islamic finance research forums, and training of trainers on Islamic capital market for lecturers on nationwide scale. Alhamdulillah, despite facing pandemic condition and market fluctuation, the domestic Islamic capital market is still developing in certain areas. As of September 2020, we have 451 companies listed as the constituents of Indonesia Sharia Stock Index, increasingly 5.1% year to date. Meanwhile, for corporate sukuk, there are an increase in both the amount and outstanding value by 12.6% and 5.4%. Therefore, the current number and a value of corporate sukuk are 161 corporate sukuk with total outstanding value is about 31.4 trillion rupiah, or about 2.1 billion US dollars. For Islamic mutual funds, both the amount and net asset value are also increased by 7.2% and 32.9%. Therefore, the total number of Islamic mutual fund is about 284 with almost 5 billion US dollar net asset value. This development did not only occur in the product side, but also on the number of investors. As of September, the number of Sharia online trading system investors increased by 14% year to date. Moreover, Alhamdulillah, in 2020, IDX was awarded as the best Islamic capital market by the Global Islamic Finance Award. In the future, we will continue to implement activities aimed at accelerating the development of the Islamic capital market. However, the development of the Islamic capital market should not be detached from the development of the real sector economy. In order to develop the real sector economy, particularly the small and medium sector, which so far have tended not to be facilitated by the capital market, OJK has issued regulation on equity crowdfunding. The crowdfunding mechanisms can make good use of technology, resulting on effectiveness and efficiency. The platform and its technology can play a role in the issuance, trading, and post-issuance processes all at once. Utilizing technology, communication between investor and issuers can also be well established. Investor can monitor the development of the issuer's business via online communication mechanism provided. The combination of regulation and technology enables small and medium enterprises to obtain funding in relatively small amounts, ranging from hundreds of millions to billions of IDR, an issuance value that is not possible without the crowdfunding mechanism. As of September, there are 3 crowdfunding platforms with total 111 issuers. Furthermore, the issuance value through crowdfunding is about 10 million US dollar, with a total number of investors is about almost 17,000 investors. Taking into account the important role of technology in the acceleration of capital market development, apart from crowdfunding, we are also developing several things. Among others are electronic reporting, implementation of electronic signatures in the licensing and registration system, implementation of electronic general shareholders meeting, and electronic public offering. A distinguished development that becoming a trend across different countries are the development of distributed ledger technology, smart contract, and blockchain for the capital market. Several countries are in the process of understanding, conducting research, and implementing blockchain for their capital market, including the Islamic capital market. In Indonesia, Safe Regulatory Organization recently conducted a study regarding the possibility of applying this technology to the capital market. Through the use of technology, we hope that the capital market will be democratized in the sense that public participation is expected to increase and the capital market can reach diverse classes of society. Distinguished guests, ladies and gentlemen, we sincerely hope that accelerate the development of Islamic capital market. In terms of policy framework, product innovation, and the use of the technology. Once again, allow me to congratulate to the organizers, moderators, speakers, and audience for taking part in the success of this webinar. May Allah bestow blessing on our activities today. Wassalamualaikum warahmatullahi wabarakatuh.
Thank you, Your Excellency, for this very insightful keynote speech. We will now begin the panel discussion entitled Islamic Capital Market Advancement as a Catalyst of Islamic Financial Market and the Real Sector Development to increase the role of Islamic capital market in the midst of pandemic. Before inviting our moderator to lead the session, let me briefly introduce him. Dr. Sultan Amir Hidayat is currently the Director of Islamic Economy, supporting the ecosystem at the National Committee for Islamic Economy and Finance, KNEKS, Indonesia. He is also an associate professor at an International Open University. Before joining KNEKS, he was an associate professor and head of business school at University College of Bahrain. He joined the University College of Bahrain in September 2007 after spending 2 years academic at International Islamic College, Malaysia. May I now invite Dr. Sultan to lead the panel discussion.
Bismillahirrahmanirrahim. Excellencies, distinguished speakers, and participants, Assalamualaikum warahmatullahi wabarakatuh. All praises belong to Allah subhanahu wa ta'ala, the one who always showers us His mercy and blessings, so we can gather virtually in this international webinar. Peace be upon the Prophet Muhammad sallallahu alaihi wasallam, the greatest role model of all time for humankind. My name is Sultan Amir Hidayat, and I am very honored and excited to be the moderator of the first panel discussion of the IFSB and IIFM high-level international webinar in conjunction with the 7th Indonesia Sharia Economic Festival, ISEF 2020, titled Accelerating Islamic Capital Market Development and Digitalization. This session will cover the theme of Islamic capital market advancement as a catalyst for Islamic financial market and real sector development to increase the roles of ICM in the midst of pandemic. I would like to inform all the participants that this international webinar is managed and controlled by institutions from 3 cities, Jakarta, Indonesia, Manama, Bahrain, and Kuala Lumpur, Malaysia. We are very fortunate to have our prominent speakers who will each share 10 to maximum 15 minutes of their thoughts and opinion. The first one, Mr. Rahmatullah, Director of Monetary Operation Department, Bank Indonesia, BI. The second one, Mr. Ijlal Ahmad Alvi, CEO of International Islamic Financial Market, IIFM. And the third one, Mr. Hisham Bukhnis, the Executive Director of International Islamic Liquidity Management Corporation. Distinguished speakers and participants, before we start our panel discussion, please allow me to give you an overview about our session today. As we know, the global impact of the coronavirus pandemic has been catastrophic. Not only it has affected the healthcare system, but also it hit the brakes on many public activities, such as schools, restaurants, offices, and other businesses. The International Monetary Fund, IMF, in its June 2020 World Economic Outlook, projected global economic growth to be at negative 4.9% in 2020, which is 1.9 percentage points below the April 2020 projection. It is important to note that the recession caused by this pandemic might be far worse than the global financial crisis in 2007-2008. Many IFSB and IIFM members have had to take a range of extraordinary regulatory and supervisory measures to alleviate the impacts of COVID-19 on financial stability in their jurisdiction and preserve the orderly functioning of financial markets. Capital market development becomes important in preserving the financial markets with the robust governance. In line with that development, Islamic capital market space is also considered by the regulators in Islamic finance jurisdictions to function orderly in the financial market. Besides, ICM is ensured to function as a good intermediary for the real sector development that can help in boosting the economic growth. Against that backdrop, due to the pandemic, the rapid technological development in ICM space is taking place to develop a more inclusive, innovative, and efficient capital market. Some government authorities have streamlined the Islamic capital market in their national agenda to deepen the Islamic financial market through innovative Islamic capital market product development by embracing technology, particularly fintech. Additionally, while governments, central banks, regulators, and international organizations have moved rapidly to address the immediate effects of COVID-19, questions remain on how policies on ICM governance and digitalization should continue to evolve to preserve well-functioned financial market. Hence, this high-level international webinar will be a timely platform for the stakeholders to discuss productively on how to address Islamic capital market development appropriately due to COVID-19 pandemic event and also rapid technological development. The key point discussion of our session are highlighting the global macroeconomic environments and Islamic financial market current conditions as the ecosystem for Islamic capital market, exploring the new benchmark rate for pricing the Islamic securities, unlocking opportunities for Islamic capital market to advance with innovative products and regulation that supports Islamic financial market and real sector development with a robust governance. Without further ado, let us start our panel discussion with our first panelist, Mr. Rahmatullah, Director of Monetary Operations Department, Bank Indonesia. Assalamualaikum warahmatullahi wabarakatuh, Pak Rahmatullah.
Waalaikumsalam warahmatullahi wabarakatuh. Dr. Sultan Emir.
How are you, Pak?
Alhamdulillah, Alhamdulillah. It's very glad to have an opportunity as a panelist in this very important discussion. Alhamdulillah.
It's our honor actually, Pak. Given your long-standing experience as a central banker, particularly for managing foreign reserve portfolio, managing exchange rate operation and open market operation, I'm very sure that we will benefit from your experience, Pak.
Thank you.
Pak Rahmatullah, can you please explain to us about the development of Islamic money market in Indonesia? This is the first one. And second thing, in addition, could you also elaborate what are the innovations in Islamic financial market that are currently being developed or has been developed in Indonesia?
Thank you, Dr. Sultan. Let me also greet other panelists today, Mr. Ijlal Alfi, CEO of International Economic Financial Market, IIFM, Mr. Hisham Buknis, the Executive Director of IILM, and also, of course, distinguished guests, ladies and gentlemen. Thank you very much for the questions. Maybe as a background, as we understand that currently we are facing very difficult situations globally, has been mentioned also by Dr. Bello and others speakers before. We are facing the COVID-19 We are facing uncertainty in the global market, the inward policy that triggers trade wars, the geopolitical risks everywhere. So we are also facing idiosyncratic risks in many countries. We are also facing the election in the US next week. But meanwhile, all this uncertainty, Alhamdulillah, in Indonesia, we try to tackle this with accommodative fiscal and monetary policy conducted by the government and of course, Bank Indonesia. However, we see that situation is getting better. We see in Indonesia the capital inflow has started to come back. But of course, there's a lot of uncertainties ahead of us. Let me give you a brief condition in Indonesia. For the Sharia financial sector in Indonesia is relatively small, and we see a very big gap that can be filled in. The financial market asset in Indonesia is currently about $112 billion, just around 10% of Indonesian GDP, while Indonesia has 80% population are Muslim. So we can see that there's a big gap and potential that can be fulfilled in. But however, let me give you the situation in Indonesia in terms of bank, Sharia bank, and also other non-bank institutions. In Indonesia, there are 34 Sharia bank. The number is 1/3 of number of conventional bank in Indonesia. But 20 of the 34 are this Sharia business unit owned by conventional commercial banks. The number of non-bank Sharia institution is 119, significantly fewer compared to the conventional non-bank financial institution, which is now around 1,121 units. For the bank, the source of funding is mainly supported by the third-party deposit and parents, because as I mentioned before, most banks, about 20 of the 34, are the business unit of conventional banks. So they are more dependent on the parent for funding and also for the third-party deposit. So this is the situation landscape that in Indonesia. And especially when you're talking about the, when you're asking about the money market, of course, this is one of the some of the factors that make the development of money market Sharia in Indonesia has some problem that we need to address. So as I mentioned before, the first one is because the Sharia bank in Indonesia mostly owned by the conventional bank, so they are mostly the unit of conventional bank. So whenever they need liquidity, they tend to borrow from the parents before seek from the market. The second one is most of the funding came from a homogeneous depositor. So maybe 1 or 2, 3 large government agency that has liquidity that can place in many Sharia bank. So that's why the Sharia bank mostly have the same position. So whenever this government agency place money, most of the bank find themselves in a long position. But whenever this government agency withdraw the fund to pay something, and then most of the bank experience short position. So they are mostly at the same position all the time. So that's why the transaction is not that high. And of course, the third one is the literacy. The level of public literacy consists of concept and core principle of the shared economy and finance is still very low. For that, there's many initiatives that we have taken. Of course, as maybe has been mentioned also by Dr. Periwarjo, our governor, we have a blueprint for Sharia economy. And then at the blueprint, there are 3 pillars: the Sharia economic empowerment, the Sharia financial deepening and and also the strengthening research, assessment, and education. And in accordance with the financial market deepening strategy, BI, as the monetary authority, has strengthened our monetary policy framework and also monetary operation strategy. And then we also have come up with some innovation. So let me talk about the innovation that we have conducted. First, in the money market, we just introduced what we call it SIPA. SIPA is the Sharia Interbank Money Market Instrument to complete what now at the market we already have the SIMA, the Murabahah instrument, and SIKA, the commodity Murabahah instrument, and also repo. And then on July we launched SIPA. SIPA is transacted based on Wakalah Bil Istismar agreement. SIPA has 3 types of business activity to be funded and 3 types of collateral. So the first one is whenever the bank want to buy or financing their activities to buy maybe the government bond, so they can use the government bond or a certificate, a Sharia certificate issued by Bank Indonesia as collateral. The second type is the SIPA, is to finance the Islamic bank business activities, but they use also the Sharia government bond and Sharia certificate issued by Bank Indonesia as collateral. And the third one is the SIPA to finance the bank business activity but without collateral. So with this SIPA, then now in Indonesia Sharia money market, there are 4 products that can be used by all the bank. We hope with the SIPA, Islamic bank can make agreement and expected rate of return at the beginning of the contract, so it is more transparent and accountable. On the open market instrument, we in 2018 we issue what we call it Bank Indonesia Sukuk, or we call it SUKB. The SUKB issue constitute as a follow-up action in the strengthening of the monetary policy operational framework as an integral part of Bank Indonesia Sharia monetary and macroprudential policy mix framework. Sukuk BI has underlying asset. The underlying asset can be SBN or the Sharia government bond, local currency, and we can also use the global bond as the this underlying asset. Sukuk BI or SUKB is a tradable instrument, but it only can be traded among banks. So it can be traded among Sharia bank, also it can be traded with conventional bank, but only for Sharia and conventional bank, because the purpose is mainly for liquidity management purposes. SUKB may also be utilized to meet the Sharia macroprudential liquidity buffer, we call it PLM, and also used as collateral for short-term liquidity assistance, or used as collateral for financing facility and lending facility. SUKB implemented based on Musyarakah Mitahiyah Bitamlik contract, issue in rupiah with the tenor from 1 day to 12 months. But currently we issue SUKB up to 3 months tenor. So from 1 week to 3 months tenor, we issue SUKB once a week, every Wednesday. The auction conducted in fixed rate term, using the conventional open market operation rate at the same tenor. The payment of principal and return also settled at maturity date. As now, at the beginning, the SUKB launched, the amount was 1.83 trillion rupiah, and it has been increasing up to 20.74 trillion in the last in the late 2019. And at the late of September 2020, the outstanding has grown to 28.66 trillion. So this is one of the instruments can be used by both Sharia bank and also conventional bank to manage the liquidity in the banking system. Secondly, we also have innovation to complete the what we call it the injection instrument. As you know, we are at the central bank in conducting our open market operation. When the bank access with liquidity, we have absorbing instrument. But whenever the bank need liquidity, we also have injection instrument. So before, for the injection instrument, whenever we need to inject liquidity to Sharia bank, the instrument was the repo, but there are some problems faced by the bank. So that's why we issued what we call it PAS-B, use Wakalah Bil Istismas contract as a contract, and the collateral can be SBIS or the Certificate Bank Indonesia Sharia, can use also Sharia government bond in local currency, and also can use SUKBI as collateral. The collateral will be pledged at BI, and the coupon payment during the PAS-B transaction remain at the Sharia bank. The auction recently conducted in fixed rate tenor for 1 week, and then variable tenor for tenor up to 12 months. The payment of principal and return also settled at maturity date. But as you know, since now Bank Indonesia doing a lot of QE, quantitative easing, to maintain liquidity in the market and ensure the liquidity in the banking system, and also due to the fiscal stimulus conducted by the government. So now the banking system, including also a Sharia banking system, experience ample liquidity. So the demand for PAS-B so far currently is limited up to 1 month tenor. So the last one that we issued is what we call is FLIS-B, Bank Indonesia for Standing Facilities Instrument for injecting liquidity whenever the bank, Sharia bank, need liquidity overnight. The FLIS-B issues use card and rahan contract, and using SBIS or SBSN, the Indonesian government local currency Sharia bond, and also the SUKBI as collateral that will be pledged in BI during FLAS-B transaction. The tenor of FLAS-B, as I mentioned, is overnight, and it's open daily. Collateral custodian fee or mu'na refer to financing facility rate, and the payment of principal and return also settled at maturity date. And also right now, due to the ample liquidity so far, non-Sharia bank has accessed this facility yet. So this is some innovation that we have conducted, we have introduced to the market. Hopefully can help to develop and deepening of money market in Sharia banking system, and also help to develop the Sharia financial industry. Thank you, Mr. Sultan.
Thank you, Pak Rahmatullah. So if I can conclude, you mentioned that Islamic finance market share is still relatively small in Indonesia, though Muslim population constitute more than 80% of the total population. Islamic market, as a result, of course, Islamic money market in Indonesia still has some limitations, since most Islamic banks in Indonesia are the subsidiary of conventional banks, and their sources of fund come from relatively homogeneous sources. And another issue that you mentioned is about public literacy on Islamic finance, which is still very low or relatively low, and that's why BI came out with blueprint of Sharia economy, which is expected to solve those issues. And you discussed about some innovations in money market, where you mentioned about SIPA, which is the latest money market instrument with 3 types. And in total now, Indonesia has 4 money market instruments. Another instrument, the innovative instrument that you mentioned is Sukuk BI, Sukuk Bank Indonesia. Sukuk BI is a tradable instrument among banks for liquidity management purposes. You also mentioned about injection instrument. You mentioned also about
standing facility.
Yeah, and then also you also mentioned about FLIS-B using Qardul Hasan and Rohan contract. Correct?
Yes.
Thank you very much, Pak Rahmatullah. It was a very
Thank you, Pak Sultan.
insightful explanation and comprehensive content. Now we turn to our second panelist, Mr. Ijlal Ahmad Alwi, the CEO of IFM. Mr. Ijlal, how are you, sir?
Assalamu alaikum.
Waalaikumsalam warahmatullahi wabarakatuh.
You and all the, mashallah, participant and panelists and
Long time no see. How is Bahrain?
Alhamdulillah, it's okay.
I already miss Bahrain, actually.
I know we miss you. So, but Alhamdulillah, good to see you and others. So, indeed, a pleasure. So,
It's really good to see you again. And of course, Mr. Ijlal, given your wide-ranging experience in the financial services industry, and of course, being the CEO of IIFM, I'm sure your insight will benefit the participants of this webinar. Since IIFM has been active in introducing standardization of Sharia compliant financial documentation and product confirmation, as well as related guidance notes for the Islamic financial services industry.
Sure.
Mr. Ijlal, what is the latest update on global IBOR or interbank offer rates transition to RFR, risk-free rates, and what is its impact on Islamic financial industry?
Yes, thank you again. Assalamu alaikum warahmatullahi wabarakatuh. It's indeed a pleasure, and again thankful to organizers. I think this subject, in terms of Islamic finance, something which, as if you see, it's not as much paid, we have paid attention, but now I think we have to work hard, and I will try to mention the reason why we have to act. Global benchmark is basically comes out of interbank offer rate, which are still issued in LIBOR or Eurobor for Europe and other hard currencies, as well as Japanese yens. And as we know, in the financial crisis, this issue came to light. How these rates can be manipulated, and that's where Financial Stability Board and also ISCO in 2013 they started looking at how to improve that. In Islamic finance, if I take a step back, we use the benchmark rates. So what you have benchmark rates for dollar and all, of course we have to refer to these rates, but these are referred as a benchmark, and actually AOF also have a standard covering the benchmark, and we know others also reference points. So benchmarks are used, but as Islamic product, we could be using it for musharika, or could be using it for even wakala, or other muraba, other contracts, or ijara, leasing contracts. So these rates are used at least in the international cross-border market a lot. In terms of its magnitude, this exercise which started in 2013, and then it's further amplified by Financial Conduct Authority of UK, that they decided, and then other regulators also followed, that they will discontinue, or they will not really compel the panel banks to submit the LIBOR rates. So this will, from the December 2021, this LIBOR will finish. So then we have to move to a rate which now regulatory driven, for at least 5 major currencies which I have mentioned, will be now they're developing based on risk-free rate. So it could be in the market they could be using repo rate as a reference, and also risk-free rates. They will be something which they are moving. Risk-free rates, as opposed to what you have LIBOR, they have 2 elements. One element is that it is backward-looking. So what you can do in the LIBOR, it was more forward-looking. So this one is is backward-looking. So it's not really something available when you do Islamic, let's say murahaba, which is required. You have to have available rate. So it will be after the transaction, then rate becomes available. So that's one thing which we have to be mindful how this rate works. And conventional also, they also have this issue that this is a backward-looking rate, so they have to do something about it, how to address and make it work like interbank offer rate, or we call it IBOR, used to work. The other element which we also have to see, that IBORs are in tenor-based rates, while the risk-free rate which regulators are now moving on are not really based on tenors. So this is also something which, conventional market also has to work. And I think that's why in Islamic now we are, trying to do something, and I will briefly mention what IFM and, others, IFSB and AOFI, inshallah, we will be working together, is, to address this element also, that these are not tenor. Thirdly, in interbank offer rates, you basically have to have, they can build in the risk factor. So this could be built in, certain basis points to, how much the risk is. So all that things which was available in interbank offer rate, actually risk-free rate doesn't provide that. So conventional industry has worked on, how to address these issues, and they had various working groups which have been working, and they have sort of come to, conclusion in various sort of working group. For example, secured overnight rate for dollar is basically they're using a compounding method to come out with the a rate which gives them the tenor they can drive. So these kind of things which are basically they have now been working, and they have already started sort of taking, some transactions are already happening. This major shift, so it's not as simple when it comes to transactions and contract. So naturally, when you have a new transaction, you can use this rate, but like I said, you have to make certain changes to make it work, and that is a bit technical, not for this at the moment for me to clarify, but this is something which they have worked it out. Other element is that your existing transactions. So Islamic also, we do have, although overall in the conventional, you can see the magnitude of this change is about 400 trillion transactions, which take place for even securities, even syndication market, in the derivative market, and also that is a huge amount. In Islamic also, we do have a sizable amount, which is in the some part of it hedging also people use, partly syndication, partly maybe ijara, murabaha, even musharaka. These are all sort of rates. If you're using hard currency rates, has to be done. So domestic, of course, later on, I'm sure Indonesia maybe also, when Indonesia will look. So domestic rates are also interbank offer rates. So that also we have seen some changes, or been discussed in GCC banks, central banks also, how to address. So this is, element which we have to see. So when you have already a transaction and you have a commitment, previously there was basically LIBOR was not supposed to be discontinued, forever. So it was basically temporary disruption, what we call it, was there, and in the documentation, this, they call it fallback. That was available, that temporarily, if it is not available, then what will it do? But now, they have to work it out, the fallback, what they call benchmark fallbacks in the documents, that it is completely disappearing. So what will basically now the new rate will have? New rate, could, as I said, is different. So it could be giving you a different rate of return. So it can have an impact on your existing transaction, how that will work it out, if you have done. And then it will also have an impact that, on the profitability. So there is accounting aspect also, and has to see certain contracts we have, which are there when there were no sort of option by the issuer, let's say for Sukuk, for example, or securities, that they could change the rate. So that is a legal, a challenge also in this exercise, and it is basically to improve the industry. So despite COVID-19, this work has continued. So the regulatory deadline and all, by global regulators have not really moved. So they are sticking to that. And now the Islamic, we have to basically assess and see what could be, the reasons. So for example, our documentation, we have assessed, in terms of our hedging and others, what could be the case. So as a documentation, we don't have as such an issue to the users who are using, they will be familiar what I'm saying, to really amend our standards. So our standard, alhamdulillah, what we have issued so far in the last 10 years, we have not really had to do any, amendment, although we review always the standard what can be done. So as a standard level, we don't have an issue, but the issue is basically at the transaction level, that, like I mentioned. So execution, for example, if they do, if they swap, profit rate from fixed to floating, which is often done, and I'm sure my dear friend from ILM will also mention, that is something which has to be done. Or if you have a cross-currency type of transactions, but generally international banks or cross-border banks, active Islamic banks, they're exploring. Even we know Islamic Development Bank also has to. Now the risk mitigation is one of the key things which we learned in 2008, and now again, like you have rightly mentioned, the impact could be much worse. I hope it's not the case, but we have seen COVID-19 certainly have changed the world, how we operate, how transaction works, and then industry has to be prepared and for these changes before actual is happening. So what from our perspective we are doing is we have a core group which we are working for major institutions, which we worked out a paper. It will be sort of a by invitation closed or consultative meeting. Of course, IFSB, AOFI, and others, we are part of working together to have a consultation, and then we take it forward what we need to do. So like I mentioned, we need to see from the documentation, what sort of a clauses we need to put it as a standard. There is a solution for Sharia also element is there. When these rates, risk-free rates are used, so in, let's say, Murabaha or in Musharaka or in Ijara, how, certain Sharia elements, what are the possibilities? So of course, bigger Islamic banks and also international banks who are, active in Islamic, we are working with them. They are preparing, but in the industry level, my suggestion would be that all Islamic industry institutions and others, since they're regulated driven, have to really, be in this consultation, and we work together to address, global, because, the other subject which I'm sure you will mention will be the Islamic rate. So, that's, I will keep it for you. But then this element to see how the implementation will work, and how, especially, element is the transaction which are there, syndication transactions, some other transaction, they have, let's say, 5-year, 10-year tenor, and they still are, ongoing. Or even new transaction have to move to a new sort of a setup, and there's a new, way how you can do it. Plus, of course, there could be certain, Sharia or standards, or, which basically now, if we use for AOFI, for example, reference point could be something which they have recommended, which how this financing, especially or sukuk, capital market, syndication, how that also has some elements which we have to see. So it's a huge exercise, and we sort of now, I think, inshallah, will be gearing up. Of course, we have to work together to basically, at least for the global benchmark, wherever it is used, we do it. Domestic, I know it's something which has been some countries, central banks are working on it. We know in the GCC also. I'm sure in Malaysia and Indonesia also in particular, they must be looking at it. And this is something which we have to do. So this is, I know, a brief which I wanted to share, and I hope we sort of, there is at least now, if somebody were not aware, because that one can say that it's a conventional, so why we bother? It's not the case, especially if you have a transactions in the hard currencies like dollar, like pound sterling, or euro, or yen, Swiss franc. These are 5-6 currencies which are basically now this major shift is happening globally, and they're driven by the regulators. So to bring.
As you have mentioned that global benchmark, even when we still use interbank rates, there are issues related to them, and now there is transition to RFR. You mentioned about the transactional issues. So I turn to my second question to you. What is the possibility actually of developing Islamic benchmark rate in present global shift?
Yes. So that is the second most important thing. And obviously, I think it's rightly to say when the conventional, they're changing to the news rate to improve the regulatory oversight and to also improve, take out any element of, misusing the rates, as benchmarks. So that's something is there. So why not, Islamic? And that is something, it's obvious we need to work on that. So our approach has been, is that we have to, also be mindful that there are two phases. One phase is, like I explained, this is we have to work on. So we cannot ignore, since industry uses those global benchmark and we don't do anything. So that is what we are doing. The other element, which I'm sure you were part of that meeting with Bahrain Work Fund, we had one round table last year, and then continue to see now, because Islamic, if you do it, although it's, for me it's too early to maybe mention things, but then we are sort of looking at it, what are the possibilities, how to do it. One element would be that if you, especially if you take hard currency, let's say dollar, you cannot have $1 rate for Islamic and one dollar rate for what they are using. So that is, I think, currency level, something which one has to be mindful and be realistic. What solutions can you bring in? Perhaps it's there is, again, we had a discussion on this subject, and some further work will be done. Some papers will further be refined, and some concept, one or two concept. Now at least the work is, I think, progressing in that respect. The concept will be developed and we zero in at one or two solutions. My sort of humble sort of opinion at the moment, again, we have to see it's a very challenging issue. And I want to clarify that when you are using the benchmark, even global, Islamic, we cannot say, that, there's still the interest rate. We use that as a benchmark, and then we have our own product, but we have to, I think there is also something which I'm sure IFSB will be, and regulators, that they also cannot allow, when we are in a regulatory environment, in the banking environment, that you have to sort of, arbitrage, can be taken. So that is also, we have to see, how to overcome that. Perhaps one can see, certain transaction, let's say mortgage, financing facilities in one country, perhaps that can be, looked at it, and you sort of start from that model. But that's, again, that's my very initial sort of assessment, maybe how to go about. And I'm sure we, our chairman, Mr. Khalid Ahmad from Central Bank of Bahrain, we discussed, and also, AOFI and FSB and others, and IRTI, IDB, also part of that, and many others, to really work and see, and further develop and see how, practically we can sort of implement it, how can we start. But I think that's something, given now the time and the opportunity and further develop the industry, one thing we have to be mindful that industry size, at the moment, in some country levels, of course, is improving. We know in terms of the percentage of Islamic banking, but globally still the size also matters in these kind of, when you develop these benchmark. So this is briefly on the Islamic rate, which I can share at this point.
Thank you, Mr. Ijral. So even though there are some challenging issues you mentioned about having Islamic benchmark rates, so but we need to work on it, right? We need to continuously discuss about it. Mr. Ijral, this is your message actually?
Absolutely. I think we continue to work, and given now the time is right, so I totally agree.
Yeah.
That we, previously maybe we tried for last, I know we at IFM level also looked at it 10 years ago also. But now,
thank you very much, Mr. Ijral.
We can do it, inshallah.
It was very insightful explanation and comprehensive explanation.
My pleasure. Thank you.
Now let us move to our last panelist, Mr. Hisam Buknis. Assalamualaikum, Mr. Hisam.
Walaikum salam wa rahmatullah.
How are you doing, Mr. Hisam?
Very good. And yourself, Dr.
Alhamdulillah, I'm fine, thank you. Thank you for joining us here.
You're welcome. It's my pleasure. Thank you very much for inviting me.
Yeah, we are very fortunate actually to have you in this panel, given your credentials being the Executive Director of International Islamic Liquidity Management Corporation, and of course, your previous wide-ranging experience in the financial services industry. Mr. Hisham, based on your experience, what are the challenges in creating an Islamic benchmark yield curve to serve the Islamic financial institution, and what kind of role that IILM has been playing to fulfill its mandate given by the central banks?
Yes, thank you very much, Dr. Sultan, for the question. So basically, before I go to the challenges that the market, Islamic financial market is facing with establishing an effective benchmark yield curve, just want to highlight, the need, what do we need to build the curve, and then I'll move on to the challenges. So basically, as the previous panelist mentioned, Pak Rahmatullah and Mr. Ijlal, there is definitely a need for establishment of an Islamic benchmark yield curve globally to serve, as a price reference for the Islamic financial market. At the moment, it's still missing, but as Mr. Ijlal mentioned, in several jurisdictions, the local regulator, like Bank Indonesia or Bank Negara Malaysia, is issuing short-term instruments and building a local curve in local currency for the Islamic money market. Now, the Islamic financial market mainly use conventional benchmark that rely on interest rates. We all know that. This was initially allowed by the scholars, as an exception, but now we need to move to really build this Islamic benchmark curve. And of course, in the past, there have been several experiments to create this curve, including the Thomson Reuters Islamic benchmark rate curve, in cooperation with Reuters, AOFI, and Bahrain Association of Banks. But of course, there have been some impediments to become a widespread benchmark, and the rate was not very popular because faces one of the deficiency that the LIBOR has actually, which is subjectivity. So what do we really need right now? We need to build a critical mass of short-term issuances in order to have an efficient market. And as Mr. Ijlal said, the size matters. So what we need is a large supply size, a deep market to have an active secondary market with decent bid offer spread and a typical benchmark size transaction. Also, what is needed is the issuances to be consistent in several different maturities to be able to address the market demand, because Islamic banks or Islamic financial institutions have different funding needs and investment requirements. Also, what we need is a broad and diversified and active investor base on both conventional and Islamic, because we strongly believe that if you restrict that only to Islamic players, you may have a systemic risk that you want to avoid. Because I didn't mention, but of course, most of the liquidity management is done through Murabaha at the moment, with various shortcomings, including the non-tradability and the credit counterparty risk, concentration. So if you want to ensure that you have a healthy Islamic curve, you need to ensure that you have players from Islamic and conventional. So the moment you have any shortage of liquidity in the Islamic industry, conventional can buy the instrument or the Islamic instrument by having already lines, being exposed to this short-term instrument. And another thing we need is standardized instruments that are easily accepted in the market, understood with skilled and trained staff and investors that are familiar with the instrument. And of course, the instruments have to be widely accepted in terms of Sharia by all the scholars in the market. And last but not least, transparency. We need benchmark rates that are transparent, easy to compute, actively traded on secondary, and safe enough to not be manipulated. And this is all the purpose of the LIBOR transition that we are going on through now. I mean, the market globally is going through transition from this LIBOR benchmark, which is based on contribution from several banks out of London, to a collateralized secured overnight financing rate, also the SOFR, which is based on transaction actually. So based on real asset securities backing this benchmark, where bank and investors borrow and loan, treasuries overnight. So at the ILM, what we have been doing for the past 7 years. So we have been established in 2010, and we started issuing short-term sukuk instruments in the market since 7 years now. And what we are trying to do by fulfilling our mandate, which is providing the market with Islamic liquidity management solutions, and also to create the first global Islamic benchmark yield curve. So what we are trying to do is to be a stable and regular issuer, to offer sizable Islamic liquidity tools on a regular basis. Of course, to be a frequent issuer, so we offer a suite of different tenors. Currently, we are focusing on the 1 month, 3 month, and 6 month. But our short-term program allows us to issue from 1 day up to 1 year. And what we have been doing in the past year or the past 2 years, actually, when we introduced the 1 month tenor last year, is to offer on a monthly basis different tenors to allow the market to manage their excess liquidity. So the Islamic financial institution. And the third point also is to be a transparent issuer, so offering pricing discovery. So in terms of size, currently we just increased our program size to $4 billion, and we have an outstanding sukuk amounted to $3.5 billion. So now it allows, we started with $490 million in 2013. Now we are 3.5 billion, and it allows us to increase our benchmark issuance size on a monthly basis. Year to date, we are about $10 billion of issuances. And by year end, we expect to reach $12 billion in 35 sukuks, which is the highest ever since our inception. So as I was saying also in terms of tenors, we consistently issue several tenors, 1 and 3 months, and when we can 6 months also, in order to build this curve. Basically the short end of the money market curve that we're trying to build, and address the demand for liquidity management, because initially when we started issuing, our core tenor was only 3 months. Then we added new tenors to meet market demand. When we started the 1 month new tenor last year, in January of 19, we kept on rolling it and we increased the size. We started with $200 million. Now we are at $400 million, and we created a different bucket of investors for each tenor. So the idea, what we do when we issue and reissue every month, is we give the flexibility to investors to keep rolling their and parking cash in the short term, or to just get back their money, basically. Because it's a short-term instrument and it's created for liquidity management purposes. Yeah. So in future, we may either increase the frequency of our issuances because we issue on a monthly basis at the moment. But what we have decided to do instead, because we believe the market doesn't need more frequent issuances, but what we did is to increase our monthly issuances size to reach benchmark size. So. Yeah. We issue $1 to $1.3 billion every month in different tenors, as I was saying. And the way how we issue also is very important, to try to set up this global Islamic benchmark yield curve, which is the pricing discovery.
Yeah. Mr. Hisham.
Yes.
Yeah, you mentioned about there is a need to establish an Islamic benchmark curve as a price reference, and you recognize the efforts done by some parties like Thomson Reuters. And you mentioned about there is a need to have critical mass, active secondary market. Credibility is still becoming a challenge. Also, typical big size transaction, diversity in investor base. You mentioned as well. You suggest also to include always include conventional players, to have widely accepted standardized instrument, transparency, and ILM has issued short-term sukuk issuance, and willing to come out with all kind of Islamic liquidity management solution, and coming out later on with the first Islamic benchmark curve offering pricing discovery. All those things, it triggers the second question: why liquidity management is critical actually, especially during crisis such as the COVID-19 pandemic, and how the ILM has been supporting the Islamic financial market in this regard.
Thank you very much for the question. It's a very important question. What we have seen, of course, due to this COVID-19, the negative impact on the real economy and on the financial market later on. The liquidity management is a cornerstone of Treasury and Finance Department. Access to cash during crisis and situation that we are facing now is crucial. We had global shutdown. Now we are back in a partial or full lockdown, depending on where you are in the world. Decrease in the household consumption, reduce or delayed in company plan of investment plans. All of these make it very difficult and can deteriorate further the liquidity available in the market. So what we do on our side, there are two ways. So basically, the first one is to provide liquidity instrument on the short-term side. On the liability side, what we call necessary Islamic safe haven instrument for the Islamic financial institution to park their cash on the short term and to serve as a cash alternative income, and rather than keeping their cash idle. And so if anything happened, they can get their liquidity back smoothly, either by holding till maturity because it's a short-term instrument, or by selling the ILM short-term sukuk before its maturity on the secondary market. So we have a solid track record right now. We issued more than 120 sukuk, $60 billion since 2013. And we faced a liquidity crunch at the end of March, beginning of April, due to the COVID-19 pandemic immediate effect. Everyone was on hold in the market, and we have seen investors' needs for short-term instruments. But we were one of the first issuer to come back in the market before sovereign issuances, and we reissued successfully in April 2020 this year. Also, the second point on the asset side, because all our short-term instruments are backed by a long-term asset portfolio, in order to make sure that our sukuk are Islamic, they are backed by a long-term sovereign assets. Right. And these sovereign assets are done through private placement with sovereign linked or supranationals. So what we did this year, actually, how we stepped in to help and support some sovereign or sovereign linked, we had, and that's why we increased our issuance supply to the market by 1 billion after the COVID-19 started to impact the economy. We have funded new assets and we have helped sovereign link to cushion the immediate effect of the COVID-19 through long-term funding in dollars with sovereign and sovereign linked. So this is how we have been doing it at the IILM in terms of short-term issuances and long-term financing.
Yeah, thank you, Mr. Sham. You mentioned about cash is very important during this crisis. People said cash is king during this pandemic. Yeah? And also you mentioned about what ILM has been doing in terms of providing liquidity instrument, which is basically short-term investment and safe haven and backed by sovereign asset. Thank you very much, Mr. Hisham Buknis. It was very insightful explanation and deep content. And we have listened to the presentation of all the panelists, which I think have strengthened our understanding about the issue. And now we need to move to our next agenda, which is question and answer from the participants. Let me check. Is there any question from the participant? 1 minute. Yeah, the first one to Mr. Pak Rahmatullah. No, sorry. Wrong one. I couldn't check on the chat. 1 minute, yeah, it's still typing. The,
Sultan,
yeah,
while questions are coming, maybe if you allow me,
yeah, please,
I'd like to
Mr.
also, I think, mention something which also important is in terms of how the industry we need to do, and we have also from IFM also signed up with some 7 other major global organizations is initiative which also we are seeking support of, which we received from global regulators like Basel Committee and also Financial Stability Board and few others, is looking at element of standardization. Of course, that's something which we are looking, but looking at digitization. So I think that is also something which is important, and we need to have regulatory support on that. So that is another aspect which probably as we go forward, and now mashallah we can see, even we can have these good seminars and webinars, and we can connect to each other. I think digitization is something which is also very critical. Look at it, and it was also in the keynote was mentioned about the smart contracts. So that is something which directly sort of linked with IFM, which we are also trying to see in future in our 2021-2023 3-year plan. That's something, of course, as industry we have to work together, but that's also something we have to see. And other major element which I know IFSB also do is the data availability. I think that is also key. So distribution, and for even regulatory foresight, we have to see how the data is coming along. Reliable data to be available for transactions also. So I think that's another huge task, which in my view, these 3 areas, especially the 2 which are critical, is digitization, which includes the smart contracts, how they work, and also looking at the distribution side, how the data, which are very widely used by global regulators. So I hope now you received the question, but I have this something which I thought will be helpful.
Yeah, the question is, we have here IILM and also IFM. Both of you are actually Islamic Finance Infrastructure Organization. The question is there any coordinated effort between all these Islamic Finance Infrastructure Organization to, let's say, to come out with some suggestion to minimize the impact of COVID-19 on Islamic financial industry? This is the first one. And the second one, many people still are not aware of the existence of Islamic finance infrastructure in Indonesia, for example, maybe. Yeah. So what do you think actually? What are your initiatives to enhance this level of awareness of Islamic finance infrastructure? Please, Mr. Ijlal, and after that, Mr. Hisham.
Yes, sure. Given the COVID-19, one relevant thing which we need to see, which has come, is, like I mentioned, is looking at the side of the technology. Blockchain was mentioned also. How it is used now. Even in Sukuk, we have seen that. We need to also see both element of digitalization of contracts and also smart contracts, which are 2 different things. So we have to be mindful. And as an infrastructure institution, we are looking at that. And other one, which is, I think we require regulatory support a great deal, which I mentioned, is looking at the data availability for transactions. So these are some things, and of course I mentioned collectively we work on issues like the global benchmark rate reforms. Naturally, that is a major thing. So these are and then of course working on the Islamic rates. So we are sort of, I think, in that respect, working also certain elements, or trying to identify which area each, at least the three standard setting from that aspect, if you look at it from standardization point of view, IFM, AOFE, and IFSB, each has a role, and that's where we are also trying to see, how we can sort of further, improve the industry and how to take it to the next level. So that's something which we are, mindful. Of course, ILM, we also take, them on board. So this is something which I should mention, that we, at least on the IBOR and others like pre-management, which is critical, I think, to see, which we have a, standardized form, which, rightly Brother Shah mentioned. We have few, but I think like a good example is Indonesia has some good, instrument which were mentioned, and how to we can make those, in terms of making it available widely. How, put a standard. So we also work on these kind of things also, that if a jurisdiction, and BI is our founding member, and we are really very thankful to them from the beginning, and IFM also, and so is IDB, that we sort of like to see sort of develop those, good instrument or liquidity management, which is critical now in this environment. If you see now, certain sectors are badly hit in terms of, how the liquidity is a key issue of many sectors now, and how we can have a, a robust, widely acceptable instrument. I think that's another thing which we need to really work on.
Related to the second question, Mr. Ijlal, yeah, since there are still many people are not aware of the existence of Islamic Finance Infrastructure Organization, what are your initiatives to raise their awareness?
Yeah, I think this seminar is a good example. In my beginning, in my presentation, that's why I mentioned, that at least the three main, what we do in terms of, each role. So I think that is critical. When we look at it, let's say about 10 years ago, we had a, a gap. It was basically documentation, products, even certain things, governance level, maybe AOFE and IFSB, those standards and all, and IFSB also developed, AOFE is also working on things. So I think now, at least generally, it is quite clear that in terms of the mandate, ILM, we know the mandate and how it works. Previously, name of IFM and ILM is very similar. So there was a confusion, and also, confusion that if you have a Sharia standard, that's enough. But we know it's not enough. When you have a Sharia standard or some, regulatory, you have to have a practical, arrangement in place, or, widely acceptable documentation in place to take industry forward, and to have a, create a transparency is a key. Sometimes, certain products we have, which I think not all products you can sort of standardize, or not all documents. So that will remain. But your key sort of, which are widely used for, let's say, liquidity management, which are sort of we put it in a widely acceptable, globally in a standardized form. That's really where the help industry. So I think now generally, clarity is there, and these three are the main areas anyway, which covers the entire spectrum. If you see it, how the conventional industry developed, so they also, generally, they sometimes they may have, if I talk about IFM, others, I'm sure they have their, deep insight. But from a IFM perspective, we have in conventional some, entities, maybe because size, but you can see that they have different sort of. ISDA is known for derivative, standards. ICMA would be known for more capital market related. You have also the Greens bond guidelines and these kind of things. Also something which we need to consider. When we have green sukuks, we have SRI sukuks and all that. Global. And then we have other trade finance. So in IFM we have sort of combined all which is there in the conventional, which each institution, of course they are bigger and they have other services, but in terms of standardization, in terms of documented confirmation, we are trying to tackle, and we are succeeding with the help of support institution and Allah's mercy in combining sort of all those what is available and try to address these issues.
Hisham, you want to add something?
Yes, thank you, Dr. Stan. Actually, it's a good question, and what we have witnessed, in IILM during this particular year is the need for the Islamic repo for the market. Currently, what we are doing at the IILM is offering liquidity management solution for Islamic investors to invest their excess liquidity. But so we are on one side, but the other side, which is giving liquidity, injecting liquidity, which is regularly done by regulators, is needed in a cross-border level. And as a matter of fact, we are working closely with Mr. Ijlal and his team at IFM, IFSB, and also IOFI will be part of, inshallah, our next Sharia roundtable to tackle the issue and to try to get as many as practitioners in the market to try to find a solution that could be widely accepted, in different jurisdictions. And inshallah, this roundtable should take place by next year. And of course, we will inform the market accordingly, inshallah.
One more thing I would like to add.
Please.
The same subject. I think what we have at the moment, and it was good to see, Rahmatullah also, what is BI has developed in terms of the collateralization. So what we have at the moment as an alternative is a collateralized structure, which IFM also we have extended. So that is how we have developed. And like Islamic, rate, I think the other big, thing which we need to do, and it is challenging also, and Brother Hisham rightly mentioned, is the Islamic, repo which can work, and something which we have to see. One thing we have to keep in mind when we are sort of doing Islamic, certain things what is in the conventional space, you can have of course, Sharia is the paramount. So you basically, Sharia, principles and all, it has to abide. So that is no doubt about it. But certain things when you're doing, especially when you do a global standard and widely acceptable, we sort of have that, certain challenges in certain sort of, structures like repo and all. So that is where Brother Sham also mentioned that we have to see. And our, next panel, Brother Ismail, our advisor from IFM, he is there. So he basically developed, the repo market and the conventional at that time. But mashallah, he's in Islamic for many years now. And so I think this is critical, but we have to see, that not all sort of what exists in the conventional sometime can be, same manner can be replicated. So it can work, it give you similar. That is what we are trying to achieve, inshallah. But it is sometimes it's a challenge. Just want to point out that.
Yeah, Pak Ahmad, continuing what Mr. Ijaz said, you mentioned about several innovative or innovation made by BI in terms of short-term money market instruments. How are you going to promote those innovations into other part of the world?
Yes, Pak Sultan, thank you. This is a very good question. First, maybe if you allow me to also address your question about the literacy first, because before we go into the other part of the world, as I mentioned, in Indonesia, the potential is so big now. But that's why we need to address these literacy issues, because that's why we put this is one of our pillars for the blueprint. Maybe, of course, we need to have more workshop. We need to have more kind of forum and everything. But maybe to make it more simple for the public, it's also something that we have to figure it out. Because, sometimes I myself found it, this is also sometimes quite, difficult to distinguish between murabah, musyarakat, and everything in Arabic. Because not everyone in Indonesia can speak Arabic and understood this kind of contract using that. But if we can find a term that very simple, and then maybe after that is translated into Arabic is easier, So then we can invite all the Muslim, 80% in Indonesia that now are mostly using conventional financial industry to shift to a Sharia, because they find it's more easier, they find it to more easier to understand, they find it too easier to use the product. Then I think all the instruments that we have, including bank, what we introduced at Bank Indonesia, like the SIPA, of course, with other open market instrument, like I mentioned, the PASB and FLISB, it can be used more widely, and then the volume can be increasing. But again, of course, we have to increase the public literacy on this, not only making the Sharia bank fighting, competing with conventional in terms of borrowing and lending, especially for channeling the credit to the public, but maybe bring more investment motive for the depositors, so not saving motive, because nowadays, from my humble observation, most of the third-party placement at the Sharia bank is they're using the saving motive. So they have excess money, so they said that maybe I can place it at Sharia bank, maybe I can get a better return or something. But I see there's a big potential if when they can come also to mutual fund with Sharia industry. There's also peer-to-peer lending in Sharia. Then also the bank, Sharia bank can also do that with the help of the digitalization. With all of that, then if the market become deeper, and then the players become more and more, the volume and transaction become high, then I think the Sharia industry can be flourish, and then we can fill the gap that I mentioned. So for the international, of course, then we need to have a strong coordination and work together with the ILM, of course, addressing all the issues about the benchmark rate and everything, because there's so many things that we can work together, and then maybe some innovation that we have done can be discussed with innovation that have done by the ILM, so we can have one common understanding and one common similar instrument that can be issued either domestically or either globally. So with this, I think we can help to, the development and how to make it Sharia market more dependent, both domestically and internationally.
Thank you, Pak Rahmatullah. This is the last question from the public. It's mentioned the volumes required for benchmark rates have to be very large. Many speakers mentioned about it. And then there should be a consortium of large banks who support such initiative. And the person wants more explanation about this. Yeah, more explanation about this sentence. There should be a consortium of large banks who support such initiative. What do you mean by this? This is his or her question. Please, Isham, maybe.
Yes, thank you, Dr. Sekan. Actually, it's a good question. When the ILM has been established based on a report done by IFSB technical force, technical workshop, the initial size that I think was mentioned was around $60 billion needs at that time. So of course, when the ILM has been established, was not to mop up all the liquidity in the market and to replace completely over alternatives such as Murabaha, but it was to provide alternatives. So now we are reaching a $4 billion program. We are increasing our supply in the market gradually. And the way how we do it, because it's a unique business model, it's the first and only Islamic asset-backed commercial paper in the market. We work with a network of primary dealers. So we have 10 large banks in the world two, for example, two in Malaysia. We have several in GCC, one primary dealers out of London. So we are working closely with several banks that provide a minimum commitment. They fulfill a minimum commitment for each of our monthly issuances. So it's our first layer of liquidity, and their role is really to distribute, to participate at primary, but to distribute the sukuk globally, except the US, because we're only Reg S sukuk. And they have to act as a market maker and a liquidity provider at secondary if any of investors in the market wants to buy or sell the sukuk, basically. So they have been very active. Last year we had close to $1.4 billion worth of secondary market, which was around 12% of our total underlying issuance. And we want to increase the supply to the market gradually to meet the market demand and offer over tenors also. But it's one of the challenges to build the curve. Is if we want to increase, we need to have, as I mentioned earlier, all our short-term sukuk are backed by a portfolio of long-term assets. To ensure it's a safe haven instrument, it has to be recognized as a high-quality asset. And in this regard, we benefit from the HQLA status, high-quality liquid assets, regulatory treatment from various central banks members, including BI or BNN, for instance. So to increase the supply to the market, you need to find very high-quality assets, Islamic, to be added to our asset portfolio, so we can issue more in the market. But also, once you do that, you need to have the demand for this. We don't want to increase from $4 to $10 billion supply just to ensure we have a full curve if you don't have enough participant in the market. So we have close to 80 to 100 investors now, with a majority of Islamic investors, Islamic banks, Islamic FI institution, central bank, pension fund, public sector also. But we really, we are focusing now on broadening further our investor base so we can increase the supply further to the market, so we can really enhance what we have started to establish this global Islamic curve. But it's totally right. The question is right. You need to have more supply. And personally, I believe that if you have more players on the short term, on the short end of the curve, it will the better, basically, because we are the only one on a cross-border short-term instrument below 1 year, and actually below 3 years. Same, there is nobody between 1 and 3 years. I'm talking about international sukuk or international short-term instruments. So the more players there are, the better will be for the liquidity, for the literacy and education of the market in terms of liquidity management and so on.
Yeah, thank you, Hisham. Pak Rahmat or Mr. Iqbal, you want to add something regarding this?
Yes, if you
please.
Know me. Yes. First, I really totally agree with Rahmatullah about the literacy. I think that is really key. Sometimes, like I was also saying, benchmark, the use, sometimes they say, oh, it is still interest rate. So I think these kind of things, to improve, and the type of contract and explaining to general public, I think that is really critical and to do. And, and I think one of the things which was mentioned to, simple terms, how, do it. So one thing which I think probably it would be right to say that, from perspective of derivative, IFM Tahawud, when we started, 10 years ago, we have put down this, for hedging. So now generally is linked because derivative is a very broad term. So now I think mostly, it's fair to say that putting the terms and simplifying it and, making it clear, like, you're talking about risk mitigation, so it's hedging. It's not derivative per se, that like in the derivative world, they have many products which are basically sometimes speculative nature. So I think this was a very fair point from Rahmatullah. So that is, I think, we need to do, and that's where we are also trying to see. I mentioned about the creating awareness and training for our standards and all. So standard setting body, although we are not really for competing with the training institutions, but just for our standards, given the practical natures and all, we need to have some training for professional development, and that level is important. But again, from the general public point of view, I know we have same case for Indonesia, other countries, Pakistan, maybe Bangladesh, other countries in Africa also. The public awareness and how it works is important. I think one element which probably, I don't know, this question which Brother Sham rightly mentioned about the liquidity management and the instrument side of it. But if the question was for the benchmark, they're having more players. So in this case, what we are seeing now, this development, it is the more role for the regulators, really. So they are taking away, previously in the global benchmark, the role of institutions was very high, the bigger institutions. So the panel banks, the bigger banks were basically main contributors. And some of them had to pay penalties also. I'm talking about the global. Each country may have their own, which maybe they will assess. So I think now, in terms of looking at the benchmark rate point of view, it's not really institutions which is there, but institutions have to see how to implement, but it is now moved towards the regulators. Yeah. So regulators, generally have taken that role now, which was previously left more to the market to dictate. So this is another point which I think will be helpful. So this is from. Thank you.
Thank you, Mr. Ijlal. Anything to be added, Pak Rahmat?
Yes, thank you, Pak Sultan. Yes, if I may add, talking about the benchmark, I agree with that it is the regulator job more, and we at Bank Indonesia have done multi-years research and assessment about it. But of course, it's not an easy task, even though for the moving LIBOR to other benchmark is until now is something that's still under discussion and then has not yet decided. But I think we have to work together about it, because as also Mr. Hisham and also Mr. Ijlal mentioned, we have to really separate and distinguish that with the Islamic benchmark and interest rate benchmark in conventional market, because we are not talking interest rate. If another issue that I may stress is again, the potential is so big for Islamic financial industry. So again, what we need is to shifting the demand now that served by conventional system to Islamic system, because now we can offer them investment opportunity and also opportunity to for the entrepreneur to get funding with more dignity compared to conventional. I think that's one thing that we can work together, so make the Sharia financial market become more strong and then flourish in the future. Thank you.
Thank you, Pak Rahmatullah. Thank you, Mr. Ijlal, and thank you, Mr. Hisham. We have completed all our agenda, and since our time is very limited, we need to end this event. This session, sorry, not this event. Yeah, I'm sure we had very interesting discussion where all the experts have given their experience, opinions, and thoughts. And I do hope all of you can get some information, knowledge, updates on the roles of Islamic capital market in the midst of pandemic. To get Allah's blessing, let us close this first session of the panel discussion by reciting Hamdalah. Alhamdulillah.
Alhamdulillah.
Thank you very much for your attention. Wabillahi taufiq wal hidayah. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you, Mr. Ijlal, Mr. Sultan, Mr. Hisham. Assalamualaikum warahmatullahi wabarakatuh.
Assalamualaikum warahmatullahi wabarakatuh.
Thank you, Dr. Sultan, Mr. Ijlal, Mr. Rahmatullah, and Mr. Hisham for very informative session and rich discussions. We'll now continue our seminar with the second session, which is entitled Digitalization of the Islamic Capital Market and the Market Code of Conducts. Our moderator for this session is Mr. Primadanu Aziz from Indonesian Financial Services Authority, OJK. Mr. Primadanu is holding a bachelor degree in accounting from UGM Yogyakarta and Master of Science in Islamic Finance from Durham University. He was attached with OJK in the Department of Sharia Capital Market, then the Financial Services Sector Research Department, and now he is engaged with the Financial Literacy and Inclusion Department as a head of financial education. Please welcome with me our moderator for the second session, Mr. Primadanu Aziz. Please, the floor is yours.
Thank you very much, Brother Ahmed, for introducing me. Bismillahirrahmanirrahim. Honorable guests from Islamic Financial Service Board, FSB, International Islamic Financial Market, IFM, Islamic Development Bank, IDB, Central Bank of Indonesia, Indonesia Financial Services Authority, and National Committee for Sharia Economy and Finance. Excellencies, respected speakers and panelists, ladies and gentlemen, Assalamualaikum warahmatullahi wabarakatuh. May Allah bless us all with good health and prosperity. Good afternoon to all of us. My name is Danu from Financial Literacy and Inclusion Department, OJK. It is a pleasure and indeed an honor for me to be here today as the moderator of the second session of the webinar on the prestigious event that brings together experts, regulators, academics, and influential market players to discuss a very timely topic about accelerating Islamic capital market development and digitalization as part of the 7th Indonesia Sharia Economic Festival, or ISEF, which envisions Indonesia to become a global hub for Islamic economic development. We are all understand that we just concluded a wonderful panel discussion from the first session, and then we all know that technology has indeed played an important role in accelerating Islamic capital market development. Over the past decade, financial technology, widely referred to as fintech, has grown primarily due to growing internet access worldwide and the emergence of smartphones and apps. The current COVID-19 pandemic might be considered as a blessing in disguise in terms of the impact of industrial revolutions to online technology, especially in capital market industry. With many people staying at home, working from home, school from home, and with some having their work, businesses, and income disrupted, they've begun to realize the value of investing. As smart devices are increasingly become part of everyday life for most people in the digital age, it is essential for the Islamic capital market to become more innovative so that it can become a catalyst for growth. So in this second session of webinar, we will discuss how is actually digitalization improves the quality of the investing experience, particularly in Islamic capital market, how it influences the speed and accuracy of the experience, what are the importance of embracing digitalization to spur the growth of Islamic capital market, and how technology through smart contracts makes products more reachable to investors. So that's going to be pretty much the extent of our discussion in this session today. But before we proceed, let me just remind again to all participants, if you have any questions or comments regarding the topic that we will discuss today, please do type in the chat box and I'll read it out later during the Q&A session. Now to begin the second session of the webinar, of course, I would like to warm welcome all the members of the panel today. Unfortunately, Dr. Mohammed Obaidullah will not be able to join with us due to health issues to deal with. We ask Allah subhanahu wa ta'ala to help him to recover and be at full health soon. Amin. And I just want to remind all of us here to make dua for him, inshallah. But still, alhamdulillah, we are so blessed to have some global Islamic economic and finance experts that are with us today from various backgrounds, including professionals, leading market players, and regulators. So I will be inviting our first panelist, Mr. Irwan Abdullah, Division Head of Islamic Capital Market, Indonesia Stock Exchange. And then the second one, Mr. Ismail Dadaboy, Advisor of International Islamic Financial Market, IAFM. And finally, Dr. Rifki Ismail, Assistant Secretary General of the FSB. Once again, we are very grateful for your presence in this webinar. So we have speakers in such order to deliver their presentation, inshallah, for about 10 to 15 minutes maximum. I'll read brief profile of each panelist before the presentation, and after we have concluded all the presentation, we will open the floor to all participants to have the Q&A session. So I'm gonna start off with our special guest, Mr. Irwan Abdullah. I will say Pak Irwan. Assalamualaikum, Pak Irwan.
Waalaikumsalam warahmatullahi wabarakatuh.
How are you, Pak Irwan?
Fine. How are you,
Alhamdulillah.
Pak Danu?
Alhamdulillah. Pak Irwan is undoubtedly one of the most iconic figures in Islamic capital market in Indonesia. Currently, he is head of Islamic capital market at the Indonesia Stock Exchange and also member of Islamic Capital Market Committee at the National Sharia Board of Indonesia. He has a lot of achievements, especially in developing some education program and instruments in the Islamic capital market of Indonesia, such as Sharia Capital Market School, Sharia Stock Indexes, Islamic Philanthropy Products, and Sharia Online Trading Systems, which is the world's first Sharia compliant online trading platform for retail investors. He is the first Indonesian to receive the Cambridge Islamic Finance Leadership Award in 2017, and recently he has been awarded for his contribution as the upcoming personality in Global Islamic Finance 2020 from Global Islamic Finance Award. So a very impressive CV of Pak Irwan, of course. So without further ado, I would like to invite Mr. Irwan Abdullah to deliver his presentation. Pak Irwan, the time is yours.
Thank you, Pak Danu. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Raditu billahi rabba wa bil islami dina wa bi Muhammadin nabiyya wa rasulullah. First of all, I will say thank you for the ISEF, the IFSB, and the KNIKS for this session. And I think will be, I hope it will deliver the best thing to the industry. I will talk about the optimizing fintech for retail investor, and I think I will deliver with the presentation. Please, somebody saw up my material. Okay, thank you. Why this is very important for industry, and why I will deliver this point of achievement, because this is I think it's only in Indonesia we have built something we call it digitalization of the fatwa, become the system, become a platform, the IT-based platform. And I will share this is to all of you here. First, next, please. Let me show something about the definition before I talk about the system. Okay, in my opinion, when we talk about the Islamic fintech, it means we talk about the technology-based innovation, which is created to facilitate business activities in the financial industry which comply with Sharia principles. This is the very important definition, because we talk about the tools for the industry, how to develop and how to improve the market. Next, please. Okay. When we talk about the Islamic fintechs, we have the 4 values, or we have the 4 very important objective. And if we fail to meet one of them, it means we failed to develop the Islamic fintech. Okay. An Islamic fintech, it should be facilitating the market access, increasing market efficiency, expanding market deepening, and delivering lower transaction costs. This is the definition and the values, and we had when we build the system, when we transport the fatwa, become a system. We use these 4 values because I believe with all these values we can create what we call it maslahah about the system to the industry, to the public. Next, please. And let me talk about the driver for the Islamic fintech currently. Okay, we talk about the 2 things. First, about the government support. Without the government support, anything is possible. It is impossible to develop, because the government can provide ease of doing business first, and legal certainty. This is very important for digital business players in that country by providing incentive, if can, and issuing regulation that support fintech development. That's why the government support is very important to this industry. Second, we talk about the digital world and young people. We talk about digital and young. Why? Because we live in 4.8 billion young people today in the world. We talk about 3.6 billion people using internet. And we talk about 7.8 billion mobile subscriptions. And I believe almost all the countries in the world have the same values, have the same variables. We cannot live without digital, and we live in the few young people. Next, please. Another data. All my presentation is about a data, because based on this data, we can discuss. We can discussion how to develop and why Indonesia can improve, can develop the significant performance in only 10 years. Okay, look at the data. From 10 countries in the world, Indonesia, the median age of Indonesia is 28 years old. It's the same as 68% of the population of Indonesia is young people. This is very important because we talk about how to develop the business. Because we will talk about how to use the technology. Because we will talk about how to increase the performance. So we must know our power, our market. And this is the fact. Our market is 68% young people. This is very important data. Next. Another data I will show you about the facts. Some of information about Indonesia, especially about the Islamic capital market of Indonesia. The ICM, the Islamic capital market of Indonesia, has the first ranking Islamic finance country from the IFCI 2019. Indonesia is the fourth most developed Islamic finance market from the IFDR, and Indonesia is the best Islamic capital market of the year, 2019 and 2020, from the GIFA, and Indonesia is the most Islamic fintech startup, based on the Islamic Fintech Report 2018. This is the fact of Indonesia. Maybe some of you forgot about this fact, that Indonesia, that Islamic capital market, that Islamic finance of Indonesia is known in the global market. Okay. Another fact is, when we talk about the Indonesia, we talk about the fifth largest archipelago country in the world. This is very important because we will talk about technology. Indonesia is the huge country with a lot of islands. Okay, and the other things, Indonesia, almost 87% of the population are Muslim. This is another info. Next. Okay, some facts about the Islamic capital market of Indonesia. You can see from the data that our market has a huge room to grow, very big. And this is the perspective of our market. Okay. From the, you can see from the number of listed stock, from the value, from the market share, we have a lot of room to grow. We talk about the potential market in the world. Next. Based on all the data, okay, in the Indonesian stock exchange, the IDX, created one of the platform. We call it the Sharia online trading system in 2011. And this is, I believe, this is the first Islamic fintech in the world that convert fatwa into online trading platform that meet Islamic principles, and this system used by retail investor as a tool for investing in Islamic stock. Because we believe the data said we live in technology, we live in with the 68% population, a young population. We live in the huge island. We have a lot of island. We live in the 86% of Muslim population. So we create the system, can connect it, all the data. We create a platform to increase our performance, the industry. How the system, how the platform come in. Next. This is the model of the business model of the system. You can find out that the SOTS is the system derived from the fatwa, especially fatwa number 80, developed by Islamic broker company, not by Indonesian Stock Exchange. We only develop the business model, but the system itself, the platform itself, developed by the Islamic brokerage company. Then the system certified by the National Sharia Board, because we talk about the comply with the principle, but with the Islamic principle. So must be certified by the Sharia National Sharia Board. And the system will used by the investor, especially retail investor, as an investment tool. Only Islamic stocks are allowed for trading. You can see on the next slide how the trading schemes Please, next slide, please. Okay, see. The system is very simple. Every IT developer can do this only once. It's very simple because we only build the firewall from the existing system that had by the Islamic brokers. We build the business model and we build the firewall. With this system, so order for non-Islamic stock will be rejected. Investor only can buy Sharia stock. If they have no sufficient money in the account, they cannot borrow from the Islamic broker, from the broker. Because, the investor cannot do the margin trading. The investor cannot do the short sharing. All the Sharia principle in the fatwa, we convert to the system. Next. And about the, you can see the result of this system. When we build this system in 2011, and today, based on the September 2020, you can see the result. Okay, the number of Islamic retail investors increased significantly. The market share increased significantly. Right now, we have a 5.58 Islamic investor to total %. We have 25 actively trading. And the important thing, in Indonesia, if you want to be the investor, the stock investor, you only need less than $7 for the initial money to be a Sharia investor. It's very cheap. And I believe this is the one of the key success factor why the system can increase the number of investors significantly in only 10 years. The last presentation, I will talk about the next, please. Okay. As I said before, if we talk about how to develop the Islamic fintech, we must remember 4 values. Okay, that's why the SOTS, when we build this system, we focus on that 4 values. The system must create a new concept of trading Islamic stock. The system must facilitate market access. The system must increase market efficiency in the market. So the investor can easily access, can easily trading, can easily sell and buy the stock using this system. And the investor no worry about the Islamic principle, about the compliance. The system do all the things. And the system can decrease the taxation cost, can decrease the initial money for the investor. This is how we build the system. This is how we digitalize the fatwa, become a system, become a platform. This is why our market growth very significant in the recent years. Thank you.
Thank you, Pak Irwan. Thank you very much, Pak Irwan, for your enlightening presentation as always. Very interesting indeed when you mentioned that actually Indonesia has been recognized as Islamic Capital Market of the Year in 2 consecutive years, 2019 and 2020, by Global Islamic Finance Award. And it's really something we should be proud of. And certainly, Islamic Capital Market of Indonesia has a huge potential to grow, not only because of our retail investors that keep growing, but also government support by providing legal certainty and incentives to optimize Islamic capital market digitalization in Indonesia. And finally, I'm noting that financial technology has indeed played a major role, especially when you talk about Sharia online trading system, how it has significantly facilitated market access, increased market efficiency, expanded market deepening, and most importantly, decreased transaction costs for retail investors. And that really shows how digitalization has actually reduced costs and hence support the development of Islamic capital market. Thank you once again, Pak Irwan, for sharing. We've got some question for you actually, but we'll get back to you for the Q&A session. Thank you, Pak Irwan. So our next speaker we will have with us now is Mr. Ismail Dadaboy, advisor of International Islamic Financial Market, IFM. Assalamualaikum, Mr. Ismail.
Walaikum assalam. How are you, brother?
Alhamdulillah, Alhamdulillah, Mr. Ismail. Thank you once again for joining us with us today. Mr. Ismail Dadaboy has worked within capital market and investment banking, spanning over 30 years, gaining knowledge across the market in Islamic finance and conventional banking, dealing in short-term money market, options, swaps, structured products, as well as corporate finance. He spent 10 years with Merrill Lynch and then 20 years with UBS across London, Singapore, Bahrain, and Dubai. He started and headed Islamic finance for UBS back in 2000, and UBS quickly developed as a major force in the Islamic finance arena and gained many industry awards with numbers of first and innovative products like range murabah investment, dual currency murabah, exchangeable sukuk for khazanah, real estate and structured products, plus others. The extensible sukuk itself earned over 12 different awards. MashaAllah, we would be interested to know what the exchangeable sukuk is all about, Mr. And recently he set up AIMS, Alternative International Management Service, an Islamic advisory services company with 3 other managing partners to serve the financial market, covering banks, corporates, takaful, and high net worth individual. So without further ado, please welcome Mr. Ismail to deliver his material. Mr. Ismail, the time is yours.
Thank you very much indeed. Ladies and gentlemen, Assalamu alaikum and a good afternoon, good evening to you all. I wish to thank the organizer for arranging this international seminar and giving me the opportunity and a platform to participate with such distinguished panelists. Can we have the slide, please? All right, let's wait there. Let me continue. Ladies and gentlemen, the digitalization is nothing new. However, due to the lockdown, we're now simply being fast forwarded by the pandemic. I would say this simply expedited the banking customer to move forward in adopting digital banking via the internet, mobile apps, and ATM. I think I can say pandemic provided the boost to the overall banking industry. Going forward, I would say the B2C was actually forced the market to move quickly in adopting virtual digitized banking. Obviously, digitization has brought efficiencies and ease of dealing with the banks. Obviously, this has led a number of branches being closed and has allowed banks to cut cost and recoup the initial development cost. So now, can we have the next slide, please? Click. One more. That's it. Thank you. So basically, let's look at the definition of what is digitization. From my perspective, it is a simple word, but it is a technology-based automation that provides and executes seamlessly and efficiently a financial transaction. So is digitization really disruptive? Well, I won't say it's disruptive as such, but it basically does the transactions and the cash flows and shift everything which is currently done manually into an efficient transaction flow without the intervention of humans, and therefore eliminating any errors. Obviously, the fast development of technology in the global world, and one can see how the stock market is trading technology companies, there's a lot of confidence in them that they will continue to develop and produce more. However, the financial market has already embraced, and I will discuss this as we go along, it has embraced for a long time, but I think we've come to a point where we need to now accelerate. However, as I mentioned early on, the technology has basically meant we're now going branchless at the retail banking level. However, the capital market digitalization still has a long way to go, but we are working on it, and we will discuss this in the slides that we go along. In addition, digitalization has led to, for example, mobile wallet, also led to distributed ledgers. So these are some of the benefits that digitalization has brought forward. If I can request to go on to the next slide, please. Let's look at how the capital market has moved over the time with digitalization automations. We don't hear about these digitalizations in the marketplaces as such. We hear what's been happening in the retail level because it impacts the masses. Ladies and gentlemen, as far as the capital market industry is concerned, digitalization has been around for a number of years. And there has been a move to digitize and automate many functions going forward and reduce the human interactions. Obviously, as I mentioned earlier, it brings efficiencies and removes human errors. Smart automation in the capital market is not new. Sukuk do have physical certificates, do not have physical certificates anymore. Now we have global certificates lodged with the clearing systems like Euroclear, Clearstream. In fact, Sukuk has become digitized in a way. Then we have straight-through processing. I'm sure many banks, Indonesia and globally, process the transactions that feeds directly into the settlement from trade input without human interaction. That again, in a way, is digitization. Now, looking at the Eurobond for a second, let's look at Eurobond for a second, which developed the track system. And I'll explain what track system does. It's basically a matching transactions prior to going into the settlement cycle. So when the transaction is done, the two parties, the buyer and the seller, it goes into this track system, which matches all the relevant elements, the prices, the settlement date, the issues, etc., etc. And once it is matched perfectly, it flows directly to the clearing system for settlement. Again, through digitizations, we have achieved efficiencies, so therefore when the settlement can happen without human interactions. However, if there are errors, tracks will highlight that. So it has made the settlement cycle much efficiency. Then if we look at the bond lending side, for example, the bond lending is operated by the clearing system where you have your Sukuk or you have your Eurobonds. I'm talking about more from a Eurobond perspective rather than Sukuk, because there is an element of borrowing securities to do the settlement. So we will exclude the Sukuk element. We just look at from the bonds perspective. The systems have the clearing system have the systems coded whereby it can identify your delivery and see whether you have enough securities to make the delivery. if you don't have the securities, it automatically finds sources which can lend those securities and do the settlement. Again, no intervention. It's a straight through settlement, straight through matching, straight through looking at the deficiencies of the bonds and then settling. However, the clearing system have gone one step further by offering tripartite. Tripartite is much efficient settlement processes for people who wants to, inverted comma, again, looking from a conventional point of view, because we need to develop all this in a Sharia compliant manner going forward, whereby you have got excess liquidity and you want to place that liquidity and you tell the system that I will take certain issues, I will take certain ratings, I will take certain volumes of the issue size, etc. And the system automatically matches and puts that collateral separately away from yourself as well as the lender. So therefore, it is a transparent and a secured funding. Sukuk can also be done under tri-party structure. However, there is an element that needs to be discussed with Sharia to make that efficient and acceptable. But from a system point of view, it does exist. Now, if I can request to move on to the next slide, please. Now, as part and parcel of digitization, we now need to look at smart contract. So what is the definition of a smart contract? The way I put it, a smart contract is where a pertinent elements are coded onto a software programming that then performs certain actions based on it. So it's sort of an automation which is acting based on the codes that have been performed within the system. Now, if we go onto the slide itself, excuse me, computer codes based on individual contracts that automatically executes desired actions. Examples such as, if you look at Sukuk, Sukuk has a benchmark coupon rate. The system can basically look at the coupon rate and say, okay, how do I derive that coupon rate? Looks at the documentation, says it's LIBOR plus whatever. So the system can look at what was the LIBOR fixing is, add that margin, calculate the amount of profit that needs to be distributed, and distribute the payment. So therefore, the smart contract can actually flow through the coupon payment without human interaction. Now look at another possibility is execute FX forward based on the what condition and execute payment. When you do forward, when one does Sharia compliant FX forward, you will have a forward that has been I've been discussing, okay, I agree to this forward pricing, but we will execute it 2 days before the actual transaction date. On that day, the system can look at what are the conditions to execute that transaction. And again, without the human interaction, it looks at that condition, and if that condition is met, the transaction is consummated. So therefore, smart contracts, again, like automation, removes the human intervention for speedy, efficient, and error-free workflow. It can be worked with or without distributed ledger. Obviously, distributed ledger provides further confidence and further security. Now, let me continue with this. As far as smart contracts are concerned, there are a number of elements that has impact on smart contracts, which needs to be addressed. First of all, a legal smart contract, can it be legally enforceable? That's something that the lawyers will have to opine. Similarly, from a Sharia perspective, can those smart contracts be Sharia compliant? The next element would be the contract will have to have defined tamper-proof computer codes that when it is actioned, those conditions are met and triggers the event without anybody, any human being changing it. It also needs to conform to regulatory requirements. Does the smart contract have issues with the regulators? Then we have the issue of individual banks. Do they have the systems capability or the funding to spend and enhance its IT infrastructure? So yes, smart contract concept is great, workable, but there are elements that we need to work towards. Now, talking about a smart contract, IFM and ISDA have been following up in developing the smart contract initiatives. However, we are at the very early stage at the moment, and there are still many issues that needs to be addressed, and how a smart contract ability with the technology can be applied, for example, in the derivatives market, right? Like the profit rate swap as an example, and also how this technology might interact with the existing legal standards and documentations. So there are still work needs to be done, but these are important steps being taken by IFM and ISDA to enhance and move forward the so-called digitizations of the capital market. Can we have next slide, please? Thank you. Well, certainly digitization is a difficult word to pronounce. Digitization, smart contracts, and blockchain will undoubtedly develop and play an important role, and will help smaller companies or SMEs to undertake transactions like Sukuk issuance, for example, and syndication, which has been in the past been prohibitively expensive for the SME due to the size of the deals. Potential for smart contract with IFM ISDA. Let's look at some of the potentials here. As I mentioned earlier, Sukuk has a great potential to basically standardize. The advantage with Sukuk is that individual banks may not have to code those conditions. The paying agent can possibly do that. Or somehow, so basically the clearing system may do that. So the individual banks does not have to spend money to basically digitize Sukuk coupon flows. Tahawud Master Agreement. This is one of the biggest elements which I think is going to help the industry as far as the digitizations smart contract is concerned. When you look at profit rate swap, you have the elements of what are the profit rates. You have the currency swap. You've got two currencies, and they would each have underlying conditions to make the payment. Let's look at, for example, dollar profit rate swap, where you have a floating rate against fixed rate. Now, the fixed rate is straightforward. However, the floating rate, the system will have to look at the LIBOR plus the margin, calculate the differences or add on the margin to the LIBOR, and then make that payment or receive that payment. And then on the fixed rate, it's straightforward. So therefore, the profit rate will also enhance the cash flow payment mechanism by going through a smart contract. FX forward, I already mentioned early on. Mudaraba could be another element. However, Mudaraba, if it's a tier 1 Sukuk, it's straightforward, just follow the Sukuk. However, the Mudaraba would be slightly difficult because of understanding of how the Mudaraba transaction is done, where the profit rate is not fixed and is dependent on the actual profit or loss. Now, moving on to collateralized Muraba, collateralized margining and management. Early on, Brother Islal mentioned of the collateralized muraba. So you've got two elements. You've got the muraba element, which again can have this smart contract because of the forward payment element. However, the collateralized element can be incorporated because it can look at the type of collateral it can accept and whether those conditions are met, and then if they are met, then those collaterals are moved over. The other element of that smart contracts could be the margining requirements. So the contract could have those margining facility embedded, and based on the movement of those sukuk collateral, it can automatically ask for more collateral or highlight that collateral needs to be given back if it's requested. Wakala, I think, again, would follow somewhere in between all of those. So now if we move on to next slide, please. Now we've touched on sukuk because sukuk is something which is in the capital market space where everybody and all the press keeps talking about and is in the limelight. Therefore, I wanted to highlight that the two development that has taken place. It has already been mentioned early on by the CEO of IFSB about the development that has taken place in Indonesia about the small transaction 50 million by BMT, Bina Omar, through a primary sukuk issuance on the blockchain. That's a brilliant development for an SME. And I hope we can take that forward to the other countries around the globe to help the SME develop. Another development that has happened place is in the UAE, where a pilot transaction was done, just a pilot, by Guerrilla Investment on using a platform of WeTech. This again basically will give the opportunity to automate the entire process so that SME can come along. The CFO could possibly put up the transaction saying, I'm looking to fund this. I need this amount of fund. These are the Sharia elements which we can satisfy. So and then they can then issue the sukuk via this platform without the intervention of any broker-dealer. So again, straight through processing, removing some of the human element, and it will work very, very nicely for the SMEs. However, there will be a challenge when it comes to the international cross-border transactions. We're looking at sizable transactions where there has to be a lot of work needs to be done. There has to be a lot of interactions with the brokers and the dealers to make that transactions successful. Now, if we can move on to the next slide, please. Now, the way forward. Now, what else can digitization and smart technology, as well as smart contract, do for the industry? I've highlighted KYC, which we have not touched at the moment. If we can have the KYC element digitized and maybe house it at the central bank level, as an example, at a regulated level, then whenever a transaction comes in, they can actually go into the central bank database and do the KYC without getting new information, whatever. So that's one possibility. Then syndication, sukuk are another possibility where digitization and smart contracts would certainly help. The moderator mentioned early on about bringing other products on board. Structured products is very specific to individual institutions, which generally are not commoditized as such. They could also benefit by making it easy and transparent, both from the issuer point of view, as well as from an investor point of view. Corporate action. We've touched on one aspect of the corporate action is the coupon payment. But why not This can be applied to equities. It can be applied to structured products, where those corporate actions can be executed based on those smart contracts. So the challenge is not only having a smart contract, but more importantly, is the capability of the capital market banks to implement those technological requirements. This means the implementation of smart contracts may have to develop in phases because each individual banks will have to update their systems and they may have cost issues, they may have systems issues in incorporating the data feeds. So therefore, like we have seen in the retail banking, automation has happened, digitalization happened because it is done at individual bank level. But when we're dealing with the capital market, we're dealing with host of banks cross-border in addition. So therefore, there are complexities which needs to be addressed. So these are the challenges that we have, but we can certainly work on this and make a road inwards into commoditizing, digitizing, and bringing smart contracts to make life easy and get more investors involved. Thank you very much indeed.
Thank you very much, Mr. Ismail, for your very informative presentations. From your presentation, I can address some key points. First, that digital technologies has indeed transformed the Islamic capital markets across functions and products, among others, such as like contract matching, settlement cash flow on sukuk, and collateral management. And second point that I would like to address is when we talk about smart contracts, digitalization has indeed enabled us to remove bottlenecks by reducing process reliance on human intervention, improve efficiency, and of course, reduce errors. And lastly, we also have some best practices, including in Indonesia, on how blockchains can aid to lower the cost incurred through the blockchain using the smart sukuk platform to support the growth and empower small and medium enterprises. So, of course, definitely there is still huge potential to deeply embed digitalization into Islamic capital market, but we'll talk about that later, Mr. Ismail, in Q&A session. Thank you very much once again, Mr. Ismail, for your sharing.
Thank you very much.
So now we move to our last speaker, last but not least. We are so blessed to have Dr. Rifki Ismail. Assalamualaikum, Pak Rifki.
Waalaikumsalam warahmatullahi wabarakatuh. How are you, Pak Danu?
Alhamdulillah, Pak Rifki. Thank you, Pak Rifki. Certainly, Pak Rifki is a very well-known Islamic economics and finance scholar. He's currently Assistant Secretary General of the FSB and also member of National Sharia Board of Indonesia. He obtained his PhD in Islamic Banking and Finance from Durham University. His expertise and field of interest are Islamic economic and finance, Islamic monetary policy, econometrics, and social economic development. He is a university lecturer of many universities, especially in the postgraduate courses. He has been invited as an instructor in many international events, including speaker in seminars and conferences, both locally and internationally. In terms of publication, he has published a lot of papers in international journals, books, and research report, as well as articles in media. So, very comprehensive CV of Pak Rifki. So without further ado, I would like to invite Dr. Rifki Ismail to deliver his presentation. Pak Rifki, your time is yours.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Thank you, Pak Danu, for having me in the very prestigious event. Alhamdulillah, being the last speaker in the session and the last speaker in the event, I get the benefit of having all of the issues, thought, ideas, suggestion being delivered by the previous prominent speakers. Alhamdulillah. And I really enjoy presentation of Pak Irwan and Pak Ismail because those give us a lot of ideas and especially guides with regard to the digitalization in capital market. Basically, as I'm from IFSB, Islamic Financial Services Board, please allow me to also share with you our contribution in capital market, especially the Islamic capital market. If you may, okay, thank you so much for showing my slides. So next slide, please. So the IFSB, we have constructed here, we have constructed and are constructing some of our standards in the Islamic capital market. However, when we construct the standard, we revert into our pre-groups because some of the organization have also contributed and issued some standard in the capital market. For example, BIS, Bank for International Settlement, they have issued a core principle for effective banking supervision in September 2012. And then IOSCO, they have issued objective and principles of securities regulation back in May 2017. Also AIDI, they have issued core principle for effective deposit insurance system in November 2015, and IAIS, they have also issued insurance core principle for ongoing revision with a recent update in November 2017. Even they are part of our member, a working group member to construct the standard for the Islamic capital market. Next, please. So what does IFSB do? Yeah, IFSB has a work plan encompassing a series of core principles for Islamic finance regulation. So we have done, alhamdulillah, first IFSB 17 on core principle for Islamic finance regulation on banking segments. We issued that in April 2015. Also, for the IFSB 21, we have also issued core principle for Islamic finance regulation, specifically for the Islamic capital market segment. I'm very proud because I'm one of the member in the working group, so I know vividly the content of this standard. And it has been issued December 2018. And then the ongoing one, we are now almost done, inshallah, with the other standard called AIDI-FSB core principle for Islamic finance regulation, specifically for the effective Islamic deposit insurance system. Inshallah, we expect to launch this end of this year. Also, the ongoing one, hopefully we can accomplish this next year, the core principle for Islamic finance regulation for the Takaful segment. So inshallah, by having this core principle, we are accomplishing the standard for the Islamic capital market, including the Takaful and other related subject. So coming into a focus on the IFSB 21, yeah, because it's mainly taking the concentration on the Islamic capital market, the main objective of this principle is to set a principle for the supervision of Islamic capital market. And we have at least three main points here. The first, minimum international standard, which is to provide a minimum international standard for sound supervisory practices. Because the IFSB standard is to be referred by the regulator, also by the market player. So first, we provide minimum international standard for the supervisory. And then secondly, Sharia compliant disclosure. It is to protect consumer and other stakeholders by ensuring that the claim to Sharia compliance is sound and supported by the appropriate disclosure. And then the last but not the least, soundness and stability of the Islamic capital market, which is to enhance the soundness and stability of the Islamic capital market. And then what are the contents of this principle in detail? Yeah, some of the content that I might share here in this event. First, we address on the issue of a regulator and self-regulation, mainly addressing the importance of the responsibility, independence, and power of the regulator. Yeah. Again, another principles, we focus on the Sharia governance, which is CPICM number 10. Yeah, the Sharia governance should be upheld for all products, activities, and services. And then another one, to enforce of the securities regulation, particularly to enforce the system for the regulation and also the power of the regulator to implement the enforcement system. And in cooperation and the regulation, we address the importance of information sharing for domestic and international cooperation. Also, the principle for issuers to disclose the requirement and risk characteristic. And then for the auditors, credit rating agency, we also require them to have adequate level of oversight of the auditors and credit rating institution. Also, principle for collective investment scheme. So we ask for the eligibility, governance, organization, operational conduct of the collective investment scheme. So we also take focus on market intermediaries and require a minimum entry standard, prudential requirements, and operational conduct for the market intermediaries. And lastly, we also taking care of the secondary and other markets, which is the importance of transparency of trading and code of conduct. Related to digitalization, of course, the standard is inherently accommodating digitalization, even though not specializing solely on digitalization itself. But the content of the standard also address, also capture, also take account the importance of transparency and then disclosure in order to protect the market player, also the system, including the regulator, from the negative impact of digitalization. And we mainly support and also accelerate the implementation of digitalization in order to foster the Islamic capital market. Also, we address the important impact of COVID-19. Hopefully, it may comprehend the previous explanation from the panels. First, we address that based on our discussion with the member countries, we address at least 3 short-term impact of COVID-19. First, it creates a turbulence in Islamic equity markets, as also addressed by Excellency Mr. Hussein in the keynotes. In Indonesian capital market, there was some turbulence, but alhamdulillah, it was very short. It was in March. And then due to the robust response from the regulators, from the central bank and market players, alhamdulillah, we can manage that and we can solve those issues, alhamdulillah. And inshallah, the turbulence in the capital market can be managed so far. Second, also, to be honest, I also got information from other countries. I got information from Saudi, from Pakistan, from Iran, from Bangladesh and Bahrain, that they have all recognized a stability of the Islamic capital market after the outbreak of COVID-19. So alhamdulillah, it may say that the capital market under Sharia principle have been very resilient, inshallah, during and hopefully after the COVID-19. Secondly, the safe haven flows to gold and investment good sovereign sukuk. So this happened in the very short-term impact. So some of the investors, they take the investment and replace it into gold and investment grade sovereign sukuk. But alhamdulillah, as I said before, this trend have been mitigated by the strong support and strong regulatory disclosure by the regulators and RSA. Lastly, the lower investor risk appetite. Again, some of the investors which have risk appetite, they kind of move the investment to other safe haven. But again, alhamdulillah, based on the guide of the regulators and also strong support from the market players and other stakeholders, we can, at least for the case of some countries, which I know, members of IFSB, we can manage this issue. So alhamdulillah, at least I haven't heard any shock in Islamic capital market so far in the members of IFSB, which are mostly, as said by Dr. Bello before, we have 187 members capturing 57 countries. So alhamdulillah, most of our members said, alhamdulillah, our Islamic capital market have been managed so far and can control the negative impact of COVID-19. I think I may end this my presentation. Thank you, Pak Danu. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you very much, Dr. Rifki. It was a very impressive presentation indeed. if I may briefly take some point from what you have shared to us. Firstly, core principles for regulation in the financial sector are actually guidance for regulatory and supervisory authorities. And this is, of course, something that is relevant for OJK to perform its regulatory and supervisory duties over financial services activities in financial industry sectors. And secondly, Islamic Financial Services Board has specific core principles for Islamic finance regulation work plan, similar to what has been developed for the conventional financial industries that comprises Islamic banking, Islamic capital market, Islamic deposit insurance, and takaful industry. And finally, the coverage of Islamic capital market core principles will guide practices, among other things, in regards to regulations, Sharia governance, enforcements of securities, and principles for issuers, auditors, credit rating agencies, and other information services providers. And the objectives of these are, of course, to provide a minimum international standard for sound supervisory practices, protect consumers and other stakeholders, and enhance the soundness and stability of the Islamic capital market. Thank you once again, Dr. Rifki, for your presentation. And Alhamdulillah, we have heard all the presentation from our distinguished panelists. Thank you once again. That was indeed an insightful and remarkable presentations. And since we already have here some questions from participants, now I would like to open the Q&A session for the first time. Perhaps if I may ask the questions to our panelists. First is perhaps to Pak Irwan from Indonesia Stock Exchange. As you have a background in developing Islamic Capital Market School, Pak Irwan, we all know that last year OJK conducted the third National Financial Literacy Survey. Although financial literacy has generally increased from the previous survey, the capital market literacy still needs to be improved because it is the lowest sector compared to other financial sectors, less than 5%. So, Pak Irwan, in your opinion, what are the current challenges to improve investment literacy, especially in Islamic capital market, and how technology or digitalization might improve investment literacy in Islamic capital market and hence aid sustainable growth of Islamic capital market? So that's going to be a question for Pak Irwan. And then the second one to Mr. Ismail. If you don't mind, could you please highlight some of the key challenges involved in the issuance of sukuk and discuss their resolution using blockchain? Because we haven't seen many corporate sukuk issued through the blockchain technologies nowadays. And finally, to Dr. Rifki, there is a question about disclosures. Since disclosures are critical in capital market industry, we can say that it is one of highly regulated industries. On one hand, certainly disclosures may provide richer information, but on the other hand, quite logically, it may have higher costs for that purposes. The aspects of transparency in Islamic capital market could be more demanding than conventional, since we have the unique aspects of Sharia governance. So the question is, how can technology or digitalization reduce the cost of these disclosures and thus facilitate Islamic capital market industry to be more efficient so that they can grow and thrive? So that's going to be our first term for the Q&A session. So perhaps if you can start from Pak Irwan to answer the questions. Thank you.
Thank you, Pak Danu. Excellent questions. For the first questions, the answer is two main key success factors. Two main key, we have a barrier about the awareness. Okay, so why the level of literation is still low? It's very low, I think, less than 1%, right? And because the awareness is, we have the lowest awareness about the Islamic capital market between other industries. Okay, because we must convince public first what is capital market, and second, what is Islamic principle in the capital market. So we must educate people two things. Okay, and second, about the geographically barrier. As I said before, Indonesia is the fifth largest archipelago in the world. We have a lot of islands. So how to connect all the islands? How to connect the public from the one island to another? How to connect about the literation? The answer is only one: technology. We should build the technology who can connect all the barriers. But another barriers in Indonesia is about the network, internet network. You know, the level of we know lah, gitu. It's all about the connection is very poor, and this is another problem to connect. Yes, technology is the answer. But when we talk about the technology, when we talk about the internet, who connect the people all around the Indonesian islands, another problem comes. The service provider for internet is very low. It's worse, I think. This is another barrier. Okay, why technology can connect people and can as the answer of the problems? Because as I said before, technology, especially particularly about the Islamic fintech, we have 4 values: market access, market efficiency, market deepening, and lower transaction costs. That's my answer for that question. Thank you, Pak Dano.
Thank you, Pak Iwan. So it's the issue of awareness and perhaps the infrastructures that should be improved so that we can increase the investment literacy in Indonesia. Thank you, Pak Iwan, once again. So perhaps for the next response from Mr. Ismail, the time is yours.
First of all, I was slightly not clear about the challenges of issuing sukuk. Basically has been issued for the past almost 20 years now. Malaysia issued the first global sukuk back in, I believe, 2001. So we've come a long way, and it has almost now commoditized. One can do a sukuk very, very quickly. People know what the processes are. Sharia scholars understand. The syndication people understand, documentation. So I don't think there are any challenges per se. However, one of the elements which has been lacking in the market has been standardization. And on this subject, IFM early this year issued the Sukuk al-Ijara standards. So therefore, you have a standard which will basically make things easier from a Sharia point of view and documentation point of view. The other one which IFM is currently finalizing, it's in its almost last stages, is Mudaraba Sukuk for Tier 1, which banks have been using it for their capital comforts. Now, that one is almost being finalized. So therefore, from a challenges point of view, I don't think there are challenges for issuing sukuks as such at the moment. It can be done very, very quickly. Everybody knows what needs to be done. However, the question raised is on the blockchain technology. That's where the issue is. We have not seen a blockchain technology issued sukuk yet, apart from the pilot one. Right? Obviously, the one which was done in Indonesia was linked to blockchain. The element of blockchain is basically, again, coding it so the processes are more or less automized, and also at the same time, it is safeguarded with all those different elements whereby the transaction cannot be changed or tampered with. But from a commercial capital market perspective, nothing has been done yet, and we're expecting things to develop. one of the things that basically the WeTech have done a test pilot transaction. See how that goes. They hope to issue more sukuks next year. So let's see. In the same time, the Indonesian one that was done, maybe that can be taken up to the next level. Instead of just SME, what about looking at capital market cross-border transactions in dollar terms, etc.? So there are opportunities that we need to look at and develop.
Thank you, Mr. Ismail. Certainly, there's still rooms and opportunities for sukuk market in Indonesia, especially our corporate sukuk, to perhaps can also apply this kind of blockchain technology. And perhaps for the next response regarding the disclosures, perhaps Dr. Rifki may answer the questions.
Thank you, Pak Danu. Again, this is a very brilliant question. I really appreciate that. To my humble answer, the answer for the question could come from the application of our principle. Again, our FSB number 21. Yeah, if you have time and then look at our website and download the standard, you may see that in CPICM, yeah, core principle for Islamic capital market number 11 into 13. First, we require the digitalization, including digitalization and other aspect of regulation, to be incorporated in the system. So if digitalization is incorporated in the formal system, it could increase the disclosure. Yeah. And then it also may ease the disclosure of the information of the transaction and other related aspect of the capital market if it uses information sharing. Yeah. Among regulators, yeah. So because in certain countries, at least in Indonesia, Malaysia, and other parts of the world, they have some related regulators with respect to capital market. So by having information sharing among them, so it may also, and the sharing itself is based on digital, so it may ease the disclosure and the transparency of the Islamic capital market transaction and any related activities. And then another one, those are in our principle number 14 into 16. Another principle in the standard is the one number 34 into 38. It requires transparency of trading and code of conduct. So it is not only merely about the information of the trading itself, yeah, about the volume, about the securities itself, but also about the code of conduct, yeah. So by having digitalization and increase the transparency in any activities of Islamic capital market, including the code of conduct, because it's one of the important elements. If you want to deep the Islamic capital market, we need to have a very regulated and a very robust code of conduct of all market players. And then by having a digital system, hopefully we can manage, we can control, and we can direct a good code of conduct in the Islamic capital market. Thank you, Pak Danu.
Thank you, Pak Rifki. So, of course, by using digitalization and incorporating that, and also using sharing information, that would help to reduce the cost of disclosures. Thank you very much. And we already have some questions from participants, so I'm going to read the questions, but perhaps I just try to collect the question to each panelist. First of all is to Pak Irwan. There's a question that about retail sukuk. He mentioned that last month sukuk, retail sukuk caught headlines for having strong sales number, breaking previous sales record, reaching more than 25 trillion Indonesian rupiah, or about 1.7 billion US dollar. The age demographic of sukuk investor is known to be in the range of 19 to 39 years old, which I think might be due to the sales method of retail sukuk now done through online channels and or fintechs. So, Pak Irwan, do you think it is possible then to transfer this success story to corporate sukuk, and how can future sukuk offerings target millennial investors? And this is also a second question from Mr. Tariq Nasim from Securities and Exchange Commission of Pakistan. how are trades in Sharia online trading systems settled? Does have similar procedure at T+2, or can settlement be done at T+0? If could you please briefly answer this question, Pak Irwan? Thank you.
Okay, thank you, Adano. For the first question, the answer is possible. But the question is not about the possible or not. The question is it costly or not? Is it efficient or not? Issue the retail sukuk. Okay, because the barrier for the corporate to issue sukuk is about the cost. And the answer may be blockchain is the perfect answer for that barrier. Okay, it's possible and should try to issue the retail sukuk. And the blockchain, I think, is the method. It's the answer and the best method for that. Because, again, when we talk about the corporate sukuk, we talk about the cost. So the biggest barrier is cost. And retail sukuk is costly than the corporate. That's the problem. Okay. The second answer, the SOTS is not like the settlement platform. It's the tools for the investor. So this is not in the stock exchanges, but it's the SOTS built by the broker. The T+2 is the settlement process in the exchanges side. So there is no connection about the SOTS and the settlement, because settlement follow the rule by the exchanges. If the rule said T+2, like in Indonesia, yes, the SOTS should be fulfill that rule. But if the question is, if the settlement process is T+0, is it possible SOTS or SOTS can do that settlement day? Yes, because the SOTS is, pass through from the investor direct to the system in exchanges, without connected to the people from the broker. The investor can directly access the system by the SOTS, pass through and connect to the system in the exchanges. So if the exchanges do the settlement T+0, the SOTS can do. Thank you, Pak Danu.
Thank you, Pak Irwan, for your quick response. There's one question, perhaps not the last question, perhaps one question for Mr. Ismail and one question for Dr. Rifki Ismail. The first one is for Mr. Ismail. How smart contract could help improving compliance on Sharia requirement? So the question, how smart contract could help improving compliance on Sharia requirement? And question for Dr. Rifki is there any standard, perhaps is referring to IFSB standards, on implementing a smart contract in Islamic capital market? So that perhaps will be our last question. So the time is yours now for Mr. Ismail to respond the questions. Thank you.
Thank you very much indeed. As far as the question is concerned, smart contract and Sharia. If you look at how the smart contract is going to be developed, once it is, the legal documentation is done, the coding has been approved, and it is a technology which can be done, that has to be approved by Sharia. So if Sharia has approved the documentation and the processes and how it will be actioned, so therefore compliance is already done. They don't need to do more compliance. It's a straight through, as long as that coding is not changed. So from a compliance point of view, it helps compliance, knowing that the transaction is going through all the way as per Sharia. I would also like to touch base on two other elements that was discussed early on. One was the retail sukuk, Indonesia retail sukuks. I analyzed the Indonesia first retail sukuk, and I was so happy and surprised as to the success of it, number one. And number two, the diversification of the investors. Even housewives participated in those sukuk. So yes, the market, retail market will accept and will take on retail sukuk, and we need to support that. We want to see this globally, but unfortunately, the global market hasn't really taken care of the retail investors. But from the other element of the retail sukuk, moving away from government to corporates, yes, there is an issue that needs to be addressed, because the retail investor will not be as knowledgeable about the corporates. They need guidance. So therefore, we don't want the retail investors to be burnt. So maybe it's best to start with government and then maybe go down the scale of ratings. So we start with AAA, AA, and whatever, and not come up with BBB as an example. So that was one. The other element was, as far as the standardization is concerned, we touched on the subject of challenges. Since IFM have already introduced the Sukuk al-Ijara standard, it is now available on their website. They can download, make their work easy. The lawyers will be much easier and cheaper to take care of it, because most of the things have been pre-agreed by the market and with Sharia. So I would encourage people to look at it, download the standard from IFM website. Thank you.
Thank you, Mr. Ismail, for your response. So perhaps last response from Dr. Rifki, is there any standard or guidance from FSB regarding smart contract in Islamic capital market?
Yeah, thank you, Pak Danu. To be honest, smart contract, I think it's part of the product in the capital market. So there is no specific regulation from FSB as such with regard to smart contract. However, as a product of the industry, I believe that first it should be a legal system. So once we apply smart contract, it has to be approved by regulatory, and also permission from the regulatory body, RSA or central bank or any related body. Secondly, it should have a transparency, because even though it is a digital-based system, a smart contract, but since it is a capital market product, it has to comply with transparency requirement. Thirdly, it should have as well, as a Sharia product, has to comply with Sharia principle. And then, as also mentioned in our standard, since it is offering kind of services or product to the customer or to the market, the investors, so it has to have Sharia governance, a good Sharia governance in terms of the product, activities, and services. Thank you, Pak Danu.
Thank you, Dr. Rifki, for your response. So it's about the aspects of regulatory body and transparency, and also Sharia governance with regards to the smart contracts. So unfortunately, we are approaching the end of the session. I do believe we have all benefited from what we have discussed. And if you don't mind, if you could share your concluding remarks to all of us here about perhaps 2-3 minutes for each of you. Perhaps you may share your kind of strong point based on your background and expertise regarding the role of technology and digitalization as one key factor in driving the growth of the Islamic capital market. So maybe I'll do it according to the appearance of the speakers on my screen. Perhaps I can start from Mr. Ismail, and then Mr. Irwan Abdullah, and then Dr. Rifki Ismail. So Mr. Ismail, you can start first.
Well, thank you very much indeed. We have seen how the digital market have impacted the retail sector and individuals, and the benefits has brought. And we can certainly learn from this. The banks have already started learning and are looking at how technology can help them take forward. So therefore, I'm looking forward to a better dialogue with the market in developing smart contracts so that we can basically move forward and enhance our systems and make transactions much easier to process and to settle. However, the challenge, as I mentioned earlier, is going to be the systems itself, because each individual banks will have their own systems and how to incorporate those systems with this technology change. But technology is moving very fast, and I'm sure we will overcome all these challenges and come to something fruitful for the marketplace.
Thank you very much, Mr. Ismail, for your concluding remarks. Very much appreciated. And now we move on to Pak Irwan.
Okay, Pak Dano.
Thank you.
Remember about the Islamic fintech has 4 values. First, facilitating the market access. Second, increasing the market efficiency. Third, expanding the market deepening. And the last one is lower transaction costs. It's all about the Islamic fintech. And remember, we live in the digital age. Technology is a must. Thank you.
Thank you, Pak Irwan, for your concluding remarks. And then we move on to Dr. Rifki Ismail for concluding remarks. The time is yours.
Thank you, Pak Danu. My concluding remark would be digitalization is the fact. Yeah, we cannot avoid it. It is the fact, and it is based on the condition. It is the reality right now due to the COVID-19. However, in order to ensure the positive outcome and the utilization of the digitalization, including in the Islamic capital market, and in order to mitigate the risk coming from digitalization, we need to apply that robustly and based on the standard regulation, yeah, which have been issued by the international standard body, in conventional, in Islamic, yeah, in order to protect the customer, to ensure the optimal contribution of digitalization in the economy. By that, inshallah, we can hope that our economy, industry, and the ummah in general can gain the benefit of the digitalization. Thank you.
Thank you, Dr. Rifki. I mean, may Allah accept your prayers. So, with that concluding remarks, I would like to thank our expert panelists, Pak Irwan Abdullah, Mr. Ismail Dadaboy, and Dr. Rifki Ismail. Thank you very much for the time and knowledge on the topic of digitalization and Islamic capital market development. We would like to thank all participants for providing questions to the engaging discussion sessions. Thank you once again, everyone, for attending Indonesia Sharia Economic Festival ISEF 2020. Jazakumullahu khairan. Apologize for any inconvenience I've caused. Stay safe, stay healthy, inshallah, and I'll hand over to the MC, Mr. Ahmed. Thank you. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you, Dr. Rifki.
Thank you, Pak Irwan.
Pak Ismail.
Thank you, Mr. Primadanu, Mr. Irwan, Mr. Ismail, and Dr. Rifki for very insightful session and great discussions. I believe that the participants have enjoyed the session and they have benefited from the rich discussion. Your Excellencies, distinguished guests, ladies and gentlemen, I believe that all of you have enjoyed the seminar and gained the knowledge through the fruitful discussions today. I also have observed an excellent presentation and contribution by today's speakers and experts. Having said that, I can conclude that the purpose of the seminar has been completely accomplished. On behalf of the IFSB and IFFM, I would like to express our gratitude to Bank Indonesia and ISIF Organizing Committee for hosting this seminar. The appreciation also goes to OJICA for the vital role and contribution to today's seminar and cooperation to ensure a successful seminar. Finally, on behalf of the IFSB and IIFM, I would like to express my appreciation to all participants for taking time off their busy duties to attend this seminar, and to all our organization members for sending excellent participants to the seminar. Thank you again for spending time with us, and we are looking forward for future participation, and inshallah we'll see you in the physical event soon. This is Ahmed Barakat, and it was a pleasure being your master of ceremony today. Thank you very much.
Thank you, Brother Ahmed.